Good morning, everyone, once again. If you have joined late, good morning, everyone. Okay, chalo then. Good morning, good morning, good morning. So, we are starting with the revision marathon. As you can see, the schedule for 26, 27, 28, 29. The standards which we'll be covering. So, it is from 10 a.m. to 1 p.m. It can extend little bit as we'll be doing in detail only. It's not that as detail I do in the class, I'll not be doing it. For each standard, I'll be saying, okay, these are the 8 or 10 types of question that usually comes in the exam. What should you write down? What is the basic point you should write down to get technical marks? Because if you know your SBR paper is for 100 marks, out of this 70 to 75 marks is from your IS and IFRS. So the remaining 25, let's take 20 to 25 marks, is regarding your ethics, sustainability, etc. Very easy part. Now, out of this 70 marks, let's 15 to 20 marks are technical marks. Technical marks means what? Writing about the standard. When you if you have done your past papers, etc., you have an idea saying that, sir, what is written in the standard, we have to mention that. So the flow to answer the question is what? First write down the technical knowledge, whatever is written in the IS or IFRS, then write down the application, then give your conclusion. So approx I say 15 to 20 marks in your exam. Not 20 marks, 15 to 18 marks will be technical, and you have to be very good with this. You need not ratify and write down as mentioned in the standard. You should know what is the standard saying you, so that it becomes easy for us. Yes, sir. This is the first thing I will be discussing in the class. Then, as I mentioned, everyone knows the schedule also for the revision, that today will be covering IFRS 16, 15, IS 36, IFRS 5. Tomorrow, IS 19, employee benefit, taxation, financial instrument, and then IS 37, a small standard provision. Then 28, consolidation, the entire consolidation and cash flow. Very important from section A point of view. Then last day, IFRS 13 fair value, IAS 38, IFRS 2 share based payment, operating segments, IAS 20 and 23. So why did I take IAS 20 here? As I mentioned that each attempt we see a surprise question from FR. Last attempt we had a question regarding IAS 23. So this attempt, I think IAS 20 government grant or IAS 41 can come, agriculture can come. But the a separate video I will be recording it and uploading on YouTube. What are the topics which are predicted for your December attempt? That I'll do it. So this is the first point which you have to keep in mind. So the second point is what, sir? The second point is the hack to clear your hack to clear SBR. Everyone will be knowing this. Just giving an idea. See now, the hack to pass your SBR exam. It's very simple. It's not complicated. You should not think much. So the first question comes regarding consolidation. And consolidation, you have to spend 1 hour, not more than that. And here three questions will come: one 14 to 15 marks for adjustment, one IS or IFRS question, and one from consolidation. So the aim should be what here? The aim should be what? You score 20 here. Then when coming to ethics, one IS and IFRS question will come, and ethics, your aim should be to score here 14 to 15. Then the last two question, if you aim for 15, 15 also, it's enough. It's enough. So see here now. Target score should be what? 20 marks, 15, total 35. If you get 30 also, it's a very good score. Understand that we are not perfect. You're not perfect in this. You have to understand the basic and write down the basic and come in the exam. One simple point, 1 marks. Then, sir, question number 3, 15 to 18. Your aim should be to score 18 marks. But if you get 15, 12, 14 also, it's okay. So then question number 4, here also 15 to 18 approx. So approx, the target should be 60 to 65. I hope this is clear to everyone. Now, chalo, let us start with the revision of your IFRS 16. So, sustainability, APM, yes, are very important bit. That we will try to discuss in last day. We'll try to discuss this as I've not mentioned in the revision schedule. But let us try, if we have time, day 4, we will discuss that also. We'll discuss that also in the group. In our regular batch, I've shared 3 to 4 direct questions. I will share that in the revision group also. If a direct question comes, it will be easy for you. You can see these questions so that it will be easy. Chalo now, not wasting much time. No, 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 nothing. I've just discussed the hack and some points which you have to keep in mind. Now, chalo, let us start with the IFRS 16 leases. Is this topic very important? Everyone, what do you think? Yes or no in the chat box? It's enough. I'll be using my class notes only. A very important topic. Very, very, very important topic. Your pre-mock also has a question regarding leases. Your pre-mock also has a question regarding leases and IFRS 15 together. So there are a lot of questions. There are 10 type of question that usually comes from the standard. But out of this, 4 or 5 are frequently tested. So we'll focus on that. Yeah, I will share these notes once the this is done. Okay. Once your revision is done, I will share it. First, now concentrate here. Concentrate. Okay. So IFRS 16 leases. Basically, leases means what, sir? I have taken an asset on rent today and we are doing the accounting. So the person who has the owner is known as lessor and the customer is known as lessee. So in lessee, this lessee's accounting we cover in F7. So when we see in your SBR, lessee's accounting is not tested frequently. In lessee, we have to determine whether it's a lease contract. First important topic for IFRS 16 that can come in your exam. There are 2 or 3 past papers also. This question is there. Lease accounting in case of advance and arrears. We will discuss this. Recognition exemption, a very important part that can come 4 to 5 marks, but very rarely tested in SBR. This is important. Yes, sir. Sale and lease back, very, 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 very important. Sale and lease back, very important. There are 3 cases. Understand 6 to 7 points which you have to write down. If a question comes for 6 marks or 8 marks, write down 6 sentences which I'll say you. You'll bare minimum get 5 out of that. Yes. Then remeasurement modification, very important. Modification, it has not been tested, but remeasurement has been tested in your March and June. So remeasurement also we will discuss. So modification also I will discuss. I'll give an idea. Sir, then lessors accounting. We have finance or operating lease, a very important topic. This is important. This is important. Lease and non-lease is also important. 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 Then, sir, lessors accounting, then sublease. Sublease is also important. Sublease also is important. Now, chalo, let us first start with the what does a lease means. This is a normal example which you have taken in a class. Now, starting with the first type of question, that is lease. We have to identify whether the contract is a lease or not. You have to write down this definition. If a question comes, identify whether it's a lease or not. You have to write down the sentence to get 1 technical marks. So what is lease? Lease is a contract that conveys the right to control the use of an identified asset for a specified period of time in exchange for consideration. If I've taken a building from you today, that means I've taken on lease. I have defined it. That will be for 5 years. I will pay you cash. All these are the points. Then I'll consider this as a lease. It should be an identified asset. And control should be there. I should have the control. Control means what? Obtain substantial all economic benefit from the use of the asset and direct the use of the asset. So in the exam, see whether if control is transferred or not. If control is transferred, it becomes a lease contract and the asset should be identified. When will you say the asset is identified? When as a lessor, you are a lessor, you can't change the asset. You can't substitute the asset. Sir, can we substitute the asset? Yes, you can substitute the asset when the building, some leakage is there, in a machine there is some problem, etc. In that case, you can substitute the asset. So, what is lease? A important first type of question that comes in the exam. The period should be specified. Sir, can the lessor have protective rights? Yes, lessor can have protective rights. If you're giving me your car today on lease, you say, sir, you can use for 5 years. Yes, okay, no issues. But you say, sir, you can't take this car to some other country. You can't travel with this car to some other country because you're protecting your right. In that case, control. I have the control. You have transferred the control. So in the exam, keep in mind these points. So this is the definition of lease. Then, sir, date of lease. There are 2 dates: inception date, commencement date. So inception date, the date when agreement is done between you and me. Commencement date means what? Date when the accounting is done. From this commencement date, we will start doing what? From this commencement date, we will start doing the accounting. the accounting we will start doing. That is debit right to use as a credit lease liability. You will start doing this one. So I hope this is clear to everyone. If you want to refer the questions also, I'll be sharing this PDF. You can refer this so that it will be a revision for you once again. So any doubts in the first type of question that can come in your exam? The definition of lease? Yes or no in the chat box. Okay, chalo then. Now starting with the accounting in the books of lessee. Sir, we know that in lessee's books, what we recognize, instead of recording every year expense, they have complicated your life. As I mentioned, IS and IFRS is simple, but just to complicate your life, they have introduced the present value concept. They say what? Discount the future cash flows and recognize what? Right to use asset and lease liability. So the lessee will initially recognize what, sir? The lessee will initially recognize a lease liability and right to use asset on the commencement date. If by chance, if you're very lucky, if I say it's your very good day in your exam, if you get a lessee's accounting question, write down this one marks you'll get at initial what will be done. Now let us see what all is included in lease liability, right to use asset. A very important point. So what are the payments we include in lease liability? See now. Lease payment should include following five things. Fixed payment less any incentive received. What is the fixed payment? Less any incentive received. Variable payment that are fixed in substance. If variable payment that are fixed in substance, yes sir. Or it is based on any consumer price index or inflation rate, etc. In that case, I will consider this. Now a question to everyone. If variable payments are based on usage, will you include it? Do not do this mistake. You have one ethics question. It was tested in June pre-mock where they have given a question regarding this one. So I'm saying variable payments are based on usage. Will you include it? No. In the regular class also I mentioned that variable payment, if it is based on the usage of the machine or asset, it is not included. Then, sir, the exercise price. That means you are a lessor. You have given me an option, ki, sir, you can purchase the asset at the end of the lease term. So I will think, okay, it is reasonably certain that I will purchase the asset. I will include in the value. No doubts in this. Then penalties expected to be paid for early termination. Sir, will I include as a lessee? If I'm a lessee, will I include the penalties? Yes. If it is reasonably certain that I will cancel the contract, I will include it. Then guaranteed residual value, this also we will include it. These are the five payments which we will include it, and be careful in what the variable payment. Variable payment you have to be careful. So these are the things which we include in lease liability. So what are the values? What are the payments which we will not include in lease? We will not include unguaranteed residual value. Will not include unguaranteed residual value. Sir, what about non-lease payment? As of now, say no. We will not include non-lease payment. We will not include non-lease payment in this one. We will discuss this in detail, non-lease component. So as of now, remember that these are the 5 points. Then coming to the next one. So what is the discount rate we should use? The discount rate which we use is what? Implicit interest rate. It will be given in the question. It will be given in the question. Implicit interest rate, use it. If implicit rate is not given, we use incremental borrowing rate. So sometimes in the question, if it is mentioned that incremental borrowing rate is given, then write down the first priority is given to implicit rate. If it is not given, we are using incremental borrowing rate. Yes, sir. Then coming to the lease term, the next definition, lease term. What does lease term includes? Lease term includes what? Non-cancelable period plus period covered by an option to extend it if it is reasonably certain that the party will extend. Then we can cancel or terminate the contract. You can see an example. So non-cancelable period is 5, option to extend is 3, and it is reasonably certain that the party, the lessee, will extend it. So my lease term will become 8 years. Why are we studying this lease term? For the depreciation calculation. Remember that. Then I say non-cancelable period 5 years, termination is 3 years, and it is reasonably certain that the party, the lessee, will terminate. So what we will consider? 3 years here as the lease term. Then coming to the next point, right to use asset. What all is included in right to use asset? Present value of the lease payment plus what? Payment made before the commencement. Any payment like initial deposit, initial direct cost, etc. All these value will be included. Then estimated cost to dismantle or remove the asset will be included. These are the 4 payments which we include in right to use asset. So this is journal entry. Journal entry you can have a look. That is debit right to use as a credit lease liability, and provision bank if anything we have received or any payment we have made on the first day. This is the initial measurement. Initially at what value we will record. Then coming to subsequent measurement. For subsequent measurement, what do we do, everyone? For subsequent measurement, can I say for lease liability, what do we do? So we prepare the amortization table. So when we prepare the amortization table, see here, in case of arrears, do we discount the first cash flow? We will never discount the first cash flow. So I'll write down the opening balance as we have done above. Then finance cost using what? Implicit rate. Lease payment minus I get the closing value. This finance cost, where will I record? This finance cost we will recognize in the financing category. In the financing category. Simple. This is for your subsequent measurement of lease liability. In case of advance, you only say, in case of advance, will you discount the first payment today? We will not discount the first payment. In that case, only the four payments we will discount. The remaining four payments we will discount here. But sir, when we do the right to use asset calculation, all the five payments are included. So let me show you one. This is in case of arrears. See here, in case of advance, what do we do? In case of advance, first payment is there. We will not discount the first payment. Four payments I will discount. I'll get the value. So debit, lease liability, credit, right to use asset. I recorded this value. On the first day, immediately I do the payment. So I reduce my lease liability by this amount. Then the amortization table which I prepare is what? Sir, opening value of the lease liability 41,690 minus 10,000 payment. I get what? My revised opening balance. On this we charge interest. On this we charge interest, and this is what? The carrying amount. The carrying amount in the books. This is your total liability. So advance and arrears, both cases we have done. Now see here, sir. How we will present? We have to present the lease, that carrying amount we have to split into current and non-current. If a easy question comes, it's very rare that a easy question comes in your exam. If it comes, you have to mention what is the current and non-current liability to get full marks. If 8 mark question comes, you have to write down this to get 8 out of 8. Then where we will recognize the finance cost? In P&L, in financing category. Simple. Now, whenever payment is in arrears, sir, when the payment is done at the year end, what will be the current and non-current part? What will be the current and non-current part? If you see here, see, this is the value. Now, when I prepare the amortization table, 23,129. Out of this, my non-current is 14,285, and the difference between this is my current liability. It is my current liability. This is for advance arrears. In case of advance, sir, 34,859 is what? It is your carrying amount of the liability. Out of this, sir, 10,000 we are paying on the next day. If we are paying this 10,000 in the next day or the next year, this 10,000 will become current liability. The 10,000 will become what here? This 10,000 is your current liability. This 24,000 is your non-current liability. So 34,000 minus the amount that is paid is current, and the remaining is non-current liability. So with this part is also done. So see, non-current liability in case of arrears, lease liability at the end of the next year. Current liability will be what? Carrying amount of the lease liability minus non-current liability portion. Payment in advance. In case of advance, current liability is the payment that is done in the next year, and non-current liability will be what? Non-current liability will be carrying amount of the lease minus the current liability portion. So with this is the initial and subsequent measurement of lease. This will not be tested, it's part of FR, but we have seen sometimes question where the sale and lease back question comes, and the question is saying to do the accounting for the full year. So today sale and lease back gain or loss we record. After that we do the normal accounting. That is the reason. Then coming to right to use asset. So this right to use asset, what we will do with this right to use asset? This right to use asset, we will depreciate it. So this right to use asset will become IAS 40 or IAS 60. So normally depreciate. So how we will depreciate, sir? Based on what? See now. Depreciation is as follows. If I say Your pre-mock has this question, depreciation is also there in your pre-mock. In the pre-mock also it was mentioned that ROU should be depreciated. How will you depreciate it? Sir, if the lessee will retain the ownership, you have given a car to me on lease. If I will retain the ownership at the end of the lease term, I will do what? I will record the depreciation over useful life. Over useful life. Whenever a question comes, write down this, one technical marks will be getting. Then, sir, if there is no reasonable certainty, it's not reasonable that the lessee will keep the asset. If the lessee is not obtaining the ownership at the end of the lease term, in that case, we record the depreciation at what? Shorter of useful life or lease term. Shorter of useful life or lease term. Simple. So this right to use asset will be treated as per IAS 40 or IAS 16. Sir, how we will identify? Today I've taken a car from you on lease. This car I'm giving to some third party on lease. And it is not my business. It is not my business. That means I am further renting it out, letting it out. It becomes my IAS 40. Understand that. Presentation, non-current asset, right to use, and depreciation. Where will you recognize? If right to use asset is IAS 40, investing category. Right to use asset is IAS 16, operating category we record. So till here, we have discussed the accounting for lessee. Anyone, any doubts? Not tested in your exam frequently, but you should know. So that this will form a base for your lessors accounting. Okay, then chalo. There is no doubts in the first part. Then coming to recognition exemptions. Now, normally, what will the lessee do? The lessee will record debit, right to use as a credit, lease liability, and they do depreciation, amortization table. But recognition exemption, that means lessee need not follow what? Lessee need not follow IFRS 16. When will lessee not follow IFRS 16? Simple. When it is a short-term lease and lease of low value item. When it is a short-term lease or lease of low value item or lease of low value item. So short term lease means what? Lease term is 12 months or less than that. Lease term is 12 months or less than that and does not include any option to extend or renew this contract. In that case, we will normally recognize expense in the P&L like in the SLM basis, systematic basis. Then lease of low value asset. Is lease of low value asset defined in IS or IFRS? No, it's not defined. What does low value means? It is as per the company's judgment. Depends on company to company, simple. Sir, how will the company decide? The company will decide based on materiality, etc. A lot of other factors. It's not important for us. Sir, in this case, if we are not recording debit right to use asset and credit lease liability, then what we will do, sir? We will recognize expense. We will recognize what? We will recognize expense. On what basis? Systematic basis. Systematic basis means what? In your SLM. SLM basis. In our regular classes also we have done questions. So you can see here now. I have taken an asset for this is 1000 to 12,000, 13,000. So what is my total expense? 35,000 is my total. I say it's a low value item. So 35,000 is the total expense. I will not record 10,000, 12,000, and 13,000 in each year. I will take the total divided by 3. Every year I will recognize 11,667 as an expense because we have to recognize the expense on SLM basis or any systematic basis. We have done that. So with this, your recognition exemption is also completed. Till here, any doubts? These two, three questions are not frequently tested, so I'm going little bit fast. When coming to sale and lease back, we will discuss in detail. Yes or no in the chat box. No, okay. Now coming to the important topic, sale and lease back, a very important topic for SBR, frequently tested in your exam. Sale and lease back. In sale and lease back, what will happen? Sir, a person A is that he's selling the asset. He's selling the asset and then he's taking back on lease. Why we will take why will a person sell this and take it back on lease? Because he needs funds today. Cash he needs. Simple. Now, when should we treat this as a sale and lease back? It should be treated as a sale and lease back if IFRS 15 performance obligation is satisfied, control is transferred. performance obligation is satisfied as per IFRS 15. So in that case, what will the lessee do? What will the lessee do? The lessee will de-recognize the asset and will recognize, the lessee will de-recognize the asset, will recognize cash that is coming in, debit what comes in, credit what goes out. Then the lessee will recognize lease liability and right to use asset, lease liability and right to use asset. The remaining difference will be what? Gain or loss. The remaining difference will be what's a gain or loss. So what is happening in sale and lease back, understand here everyone. See now, control not transferred. Sir, if control is not transferred, if IFRS 15 performance obligation is not satisfied, in that case, we will do the accounting as what? We will do a simple accounting as a loan. We'll do a simple accounting as a loan. Asset is not de-recognized. Asset is recorded in my books. Whatever amount I've received from the customer, I will record that as what? A loan. So if control is transferred, in control is transferred, what should we do? De-recognize asset at the carrying amount. I will de-recognize it. Record right to use asset and record lease liability. So in that case, when I de-recognize the asset, can I say if I de-recognize the asset, in that we have two parts, the right which I have retained, the right which I have transferred. So the gain or loss I will record on what? The gain or loss I will record on the right transferred here. If the transfer does qualifies as a sale, then the seller lessee must measure the right to use asset as the proportion of the previous carrying amount that relates to right retained. So I will only record the right to use asset or right of use asset based on the right retained. Right transferred, I will de-recognize it. Now chalo, let us come to the again here. We have discussed the basic part. So excuse me. So listen everyone. I say example, the carrying amount is 1000. Fair value is 1200. Selling price is 1200. So your fair value, selling price both are same. Present value of the lease liability is how much? 1100. In that case, what will I say? There are three cases. The first case we are discussing, that asset is going out at 1000. So cash is coming in of 1200. That is the selling price. Then, sir, lease liability we are recording at 1100. Now, that right to use asset, we will recognize at what amount? We will take carrying amount into present value of lease liability divided fair value of the asset. So, that is what? See, 10,000, 1,000 into value of the lease liability divided by 1200. If you see your past papers, you have more than 3 to 4 questions regarding sale and lease back. Yes. So this is the way the accounting is done. This is the way the accounting is done for sale and lease back when fair value is equal to the selling price. So see now, type 4 question that comes in sale and lease back, what should you write down? First, check whether it is satisfy the condition or not as per IFRS 15. What are the 6 sentences you have to write down? See, first write down that the asset should be de-recognized. Record the sale proceeds at selling price. We will recognize the lease liability as present value of the lease payment, discounted at implicit rate, and right to use asset we will measure at this value. Yes, sir. Then you will say you will calculate the gain or loss. This gain or loss will be recognized in what? The gain or loss will be recognized in operating category. The gain or loss will be recognized in the operating category. And then we will follow the subsequent accounting. We'll follow the subsequent accounting. So this is the first case which we have done. I hope it is clear to everyone. Any doubts to anyone in the case one?
सर इसमें हम लोग सर दो तरीके से सीखे थे गेन और लॉस निकालना। सर एक राइट रिटेन्ड वाला पार्ट से सब पहले टोटल गेन निकाल के राइट रिटेन्ड वाला पार्ट से गेन निकालना, और सर
Yes.
एक जर्नल एंट्री के वे से।
Yes.
सर तो जो वो राइट रिटेन वाले पार्ट से हम लोग गेन निकाल लेते ना सर, उसमें बहुत ज्यादा कैलकुलेशन मिस्टेक्स हो रहा है।
So you can follow the journal entry. I have to. कोई issue नहीं. Okay, then chalo everyone. Let me start with the next second case, which comes frequently tested in your exam. It has been tested twice, 2 or 3 attempts. In the past 2 or 3 attempts, it has been tested twice. Yeah. See everyone now. If selling price is more than fair value. Sir, if the selling price is more than fair value, what does this mean? I say the selling price is 150, The fair value is 120. In the market, the value of that asset is 120, but I'm selling you at 150. You will not pay me 150. So that 30 will be treated as what? The 30 will be treated as a financial liability. So see now, bank account debit, my selling price 150 that comes in, it's a loan. Yes, financial liability, you treat it as a loan. A very important point. See then, sir, my asset is going out at the carrying amount, that is 100. So I've recorded the first two entry, I've removed the asset, I've recorded this. Then I record the 30 as a loan. So 30 we will recognize this as a loan. So what is the present value of the lease liability? I say 87. This present value of the lease payment includes what? The loan part also. So what will I say? I will remove the loan part. I will recognize lease liability and I will recognize the loan separately. For this loan, we follow IFRS 9 financial instrument. You have to write down this one sentence. You need not do this calculation. You have to write down this one sentence to get full marks. Yes, sir. Then credit, carrying amount, etc. Then right to use asset. Right of use asset. How we will recognize? Sir, what is my carrying amount? 100 into lease liability 57 divided by 120, that is fair value of the asset, we get 47.5. We get 47.5, and the difference will be what? The difference will be your gain or loss. So what are the six sentences you have to write down? These are the six. D recognize cash, D recognize asset, recognize loan and treat it as per IFRS 9, recognize lease liability as present value of the annual payment minus lease liability, recognize right to use asset based on what? Carrying amount into lease liability into fair value of the asset into carrying amount here, and gain or loss is recognized in operating category. Operating category. So then let us see one question which we have done. Okay, this is a reduced value. See everyone. On 1st January, J enters into a sale and leaseback entered to sell for 1 million an asset, but the carrying amount was 600,000, fair values 900,000. So this $100,000 is what? As a loan. As a loan. See what I've written first as per IFRS 16. Then I've recognized the present value of the lease liability will be what? Includes the additional finance part, we will remove that. The lease liability will be recorded at this amount. Then the gain or loss. So see here, what did I do? Cash, I have received 1 million. Lease liability, I have recorded this amount because I have removed it. Then loan, I have recorded $100,000. Right to use asset 600,000 into present value of the lease liability divided by what? The fair value of the asset. Then remaining will be a gain or loss. A very simple and a easy part. The case 2 also we have done. Now coming to the next case, case number 3. In case number 3, what did we see? See here everyone, in case number 3, if the selling price is less than fair value, if the selling price is less than fair value, if my price, selling price is less than fair value, what does this mean? So today in the market, the value is 120, but I'm selling you for 90. That means what? This 30 rupees is payment is already done. Payment is done in advance. So this payment is already done. So see now. Then how we will recognize? See now, sir, carrying amount is going out of 100. Yes, sir. Right to you bank, that is coming in 90 because it comes at the selling price. Yes, sir. Then see here now. So what is the present value of the lease lab? I say your present value of the lease lab is 67. Yes. Now this right to use asset, we will calculate based on what? 100 into 67 plus 30 divided by 120. You get this as the value. And your difference will be your gain or loss. Your difference will be your gain or loss. Your difference will be gain or loss. So these are the 6 points which you have to mention here. Right to use asset will be what? Carrying amount into present value of lease liability divided by fair value plus fair value minus the selling price. Gain or loss in operating category. Let us see a question which we have done in a class. See this one. R, an international hotel chain, is currently finalizing its financial statement, yes, etc. XYZ. On 1st July 2007, it sold one of its hotel to a third party institution and leased it back under 10-year lease. They have leased it back for 10 years. Now the selling price is what better? See, the selling price is 57. The fair value is how much? So 60. So the selling price is less, fair value is more. So the 3 million is a prepayment as an advance. The lease payment is 2.8 million per annum, commencing on 30th June 2000 exit. It is arrears. The present value of the lease payment is 20 million. Implicit rate is 6.6. The purchaser can cancel the lease agreement and take full control of the hotel within 6 months notice, etc. They mentioned. Now see here now. Sir, cash is coming in at 57. Yes, sir. Then carrying amount of my asset was how much? The carrying amount was 48. It is going up. Sir, lease liability was what? If you see, your lease liability was 20 million. I have recorded that. Sir, right to use asset. Carrying amount. Sir, carrying amount was 48 into present value of lease 20 divided by 60. That is the fair value. Plus 3 million I have done. So I get 19 here. So the difference, you get a gain of 8 million. We recognize this. Then we have written in theory what are the points which you have to write down. So with this, your all the three cases of sale and leaseback is done. So you can see here, if selling price is less than the fair value, it's a prepayment, add to right to use it. If selling price is what more than this, the financing part, we have to deduct it, etc. Yes, no issues. You can write it separately. No issues. But you have to mention that it is a prepayment. It is already done. Only in calculation of right to use asset, we will consider it. Understand that. Like we have to add it to right of use asset. You have to add it because prepayment, your basic of IFRS 16. Any payment which is done before commencement of lease becomes what? We will add it to right to use asset. So that is the reason we are adding it here. So with this, your sale and leaseback is done. Lessee's accounting is done. These all points are done. A very important point we have discussed. Disclosure useless. Now, chalo everyone. Starting with the one more important topic for SBR, lease and non-lease component. As I mentioned, September, your September attempt question was the lease and non-lease for 8 marks, and it was a very easy question. So this December attempt, the chances are very less that lease and non-lease will come again. Some other topic will come from IFRS 16. Either sale and lease back will come, or sublease, or finance or operating lease. So see now, lease and non-lease component. So what does lease and non-lease component understand here? Today I say that a person A is that person A is giving a machine to B. B is the lessee, A is the lessor. What will lessee recognize? Right to use asset and lease liability. Right to use a lease liability. So what is the payment every year? Every year the payment that is done by the lessee is 10,000. Assume yourself that we have taken a building on rent and we are paying $10,000 every 10,000 rupees or $10,000. Now this payment which is there includes two things: the rent on the machine or the building plus maintenance, plus maintenance, plus maintenance. So can I say this 10,000 payment which is there includes two things: lease and non-lease component, lease and non-lease component. So I say here rent is what 800 and 2,000 is for maintenance. 2000 is for maintenance. Now, sir, what should we do for this non-lease payment? Should we separate it and record it? Yes, bit. We should. Now, when I calculate right to use asset and lease liability, what will I do? When I calculate right to use asset and lease liability, I should consider only what? I should only consider 8,000 payments. So this 2,000, how we will recognize? This 2,000 normal expense accrual basis. Record this 2,000 as per accrual basis. Simple. Now see here now. PNL, yes, PNL, PNL, PNL. So see here, components of a contract, multiple lease components. In a lease contract, there are multiple contracts. We have to separate it based on the standalone selling price. We have discussed. Now coming to the next, lease and non-lease component. Non-lease component is part of a contract that does not convey the right to use an asset, but instead provides a service like maintenance, security, cleaning, IT support. Now see here one. Separate lease and non-lease component on a relative standalone selling price. Yes or no? I mentioned in the class, we have done questions also regarding this, and you know SSP in your IFRS 15 also. So whatever the 10,000 is there, how will I separate it, sir? Based on the SSP in the market, standalone selling price. Sir, if that is not available, some other ratio will be given in the question. Use that. Now see what does IFRS 16 says. You have to write down this point. Note, IFRS 16 gives an option to apply practical expedient. What does practical expedient means? No need to separate lease and non-lease component. The first point is what? The basic point is that we have to separate it and record it. We have to separate it and record it. But IFRS 16 provides you an option to you. Provides an option to you that instead of complicating, if you separate, the calculation will become complex. This also you have to keep in mind. This also you have to keep in mind. But the standard is saying what? The standard is saying that an option is available with you. In that option, you need not record it separately. You can record it as one only. You can record this as a one. But the preferred one is what? It is preferred that we record separately. I hope with this, the lease and non-lease is clear to everyone. Let me see here, everyone. Let us do this question which we have already done in a class. Component accounting. T has entered into a lease agreement to rent 3 office units in a business park. The contract includes a non-lease component relating to cleaning of the units. Annual lease payment amounts to $1.2 million. And the SSP is what? Of 3 units, and the cleaning services is given. One, two, three. 3 units, 3 office blocks we have taken, assume in that way, and a cleaning service is also 260. Now, if practical expedient is not applied, they are not applying this. They are not applying means separately we have to record. If practical expedient is applied, no need to separate it. So see now. Case 1, practical expedient is not applied. That means we need not separate it. Means we have to separate it. In practical expedient is not applied, we have to separate it. As per IFRS 16, you will write down the standard, whatever the standard is saying. See now, this payment of 1.2 million should be allocated based on the SSP. So what is the SSP? The SSP is what? The SSP is also same only. So if you allocate this 1200, this 1.2 million on these values, you have to allocate. Your answer will be same only. Your answer will be what? Same only here. Then the second case, if practical expedient is applied. If practical expedient is applied, that means what, sir? We will combine this together. We will recognize what? Right to use asset and lease liability. But now when you record right to use asset and lease liability, can I say there are 3 buildings? So we have to separate these 3 buildings. This 260 I will allocate to these 3 components. We will allocate to these 3 components. See now, I have taken this value. This 260 I have allocated on this value. I got 104, 116 and 40. So I've allocated to all this. I've recorded and I've allocated the cleaning to unit 1, unit 2 and unit 3. So with this, your lease and non-lease component is done. Any doubts to anyone regarding lease and non-lease component? See, as I mentioned, I can't go in detail as we do in the class. I'm revising with the questions also so that it becomes easy for you. So with this part is done. Now coming to the next important part. The next important part is remeasurement, a very important topic. As I mentioned in March and June attempt, if you see the March June 2025 paper, which has been published by ACCA, remeasurement question is that. And I mentioned whenever remeasurement modification question comes, calculation marks will be more rather than theory. Remeasurement. So what does remeasurement see? A person A, lesser is there, has given an asset to B, lessee. So lessee will record what? Debit right to use a credit lease liability. In lease payment, what all we include? Fixed payment, variable payment, purchase option, guaranteed residual value, penalties. Now normally if I say these are the lease payment we do and we recognize right to use asset and lease liability. Right to use asset and lease liability. Now I say everyone that 3 years are done. After 3 years, the lease payment is changing due to inflation in the market. The lessor is saying, "Arey baap re baap, you're paying $10,000. It is very less. Please pay me $12,000." So when you pay $12,000 in the fourth and fifth year, can I say your value is changing? This is known as remeasurement. Remeasurement. Your lease payment, variable payment, fixed option, the exercise option, guaranteed residual value, penalty. If they change, it will become a remeasurement question. So, sir, it has been changed now. So, what should we do? How should we do the accounting? What is the step one? Calculate the value of lease liability and right to use asset at the end of the third year. Till the end of the third year, you calculate the value. Yes, sir, it is coming to 17,355. Now, what is the payment in future? 12,000, 12,000. So I will discount that 12,000. Now we are standing at third date. So discounting for 1 year, 2 year. So I get what? 20,826. I get 20,826 should be my lease liability. But what is the value I'm recognizing? So 17,355. So that difference will be what? That difference will be increase here. That increase in liability. This increase in liability, I will increase it. I will increase it. What is the entry I'll pass? Debit credit. Lease liability increasing by 3471. And right to use asset, I will increase by 347. A corresponding entry is also done to right to use asset. This is only there in remeasurement, nothing in this. But what should we remember, sir? The important part which you have to remember is, listen here. In remeasurement, see now, in case of remeasurement, what are the points you have to remember? Remeasurement, lease liability will be remeasured due to change in lease payment. Whenever there is a change in lease payment, you have to keep in mind. So now the important point in your exam is this one. Which discount rate you have to use? Now see here, change in guaranteed residual value. If your GRV is changing, if your variable payment is changing, if your fixed payment is changing, can you control these? You can't control this. In that case, whenever there is a change in these three things, the lease liability is remeasured by discounting revised lease payment. Using which rate? Original discount rate. Whatever was the discount rate originally, we will use that only. We will use that only. Sir, if the remeasurement is for the lease term, I can control the lease term. Then purchase option. If lease term and purchase option difference is there, the lease term is increasing or the exercise purchase option was not included first. Now we are including it. In that case, remeasure the lease liability using revised discount rate. Which rate? Revised discount rate we will be using. You have to keep this in mind. These are the two things which you can control. If you can control, use the new rate. These two things, these three things you can't control, use the original discount rate. Original discount rate means on the day one, what was the rate? So see here now. Remeasurement of lease liability is adjusted against the carrying amount of the right to use asset. And right to use asset cannot become zero. It's simple. So what are the steps you'll follow? Calculate the carrying amount of the lease liability and ROU at the date of change. Calculate the revised lease payment considering the revised lease payment and applicable discount rate. Use the discount rate which are applicable as we have seen above. Then calculate the changes. Step 1 minus step 2, you get the change. Then make changes to right to use. Either your lease liability will increase, either your lease liability will decrease. This was regarding remeasurement. So please try out the question March, June 25. Please try out this question. Question number 3. You have a remeasurement question. Please try it out. So with this, your remeasurement is done. Any doubts to anyone in remeasurement? Now, chalo then. Now we'll be starting with the lessors accounting. We'll be starting with what? Lessors accounting. In lessors accounting, it's same as the old standard. We have to separate it. We have to classify this as finance lease or operating lease. What should we do? We have to classify this as finance lease, operating lease. So operating lease means what? A lease that does not transfer risk and rewards. A lease where the risk and rewards are not transferred. So in finance lease, risk and rewards are transferred. Risk and rewards are transferred. A very this is also an important question that comes in your exam. So lesser accounting, there are two: operating lease, financing lease. The question can come for 5 to 6 marks. You have to identify it. So operating lease, risk and rewards are not transferred. So here risk and rewards are transferred. If risk and rewards are not transferred, how do we do the accounting? We do the accounting on basis of SLM. We do the accounting based on SLM. SLM means what? Sir, over the period we record this as an expense. Then, sir, risk and rewards are transferred. Yes, sir. Risk and rewards. De-recognize the asset and record lease receivable. We will de-recognize this and we will recognize what? Lease receivable. We will understand this. So, see here now. The type 5 question that comes in your exam is what? Finance lease or operating lease. See now. What is the opening line? We have to say as per IFRS 16, if the for the lesser we have to classify this as operating or finance lease. We have to see whether the risk and rewards are transferred or not. If risk and rewards are transferred, we de-recognize and we recognize lease receivable. Operating lease, we will not de-recognize the asset, we recognize the income on SLM basis. So what are the indicators to assess? These are the indicators. Ownership transfers to the lessee at the end of the lease. At the end of the lease term, the lessee will get the ownership. If the lessee will get the ownership, I say what? It is a finance lease. That means risk and rewards are transferred. Lease contains a bargain purchase option. That means what? That means at the end of the lease term, we can, as a lessee, I can take back the asset on lease at a lower rate when compared to the market. Lease term covers major part of the economic life. It covers a major economic life of the asset. Then the present value of the lease payment is substantially all of the fair value, like 95 percentage. The present value of the lease that is 90 to 95 percentage of the fair value of that asset. Asset is specialized one. Then lessee enjoys the gain or loss in the change in the value of the asset. And then you have to write down, apply the case, and write down the conclusion here. Simple. You have to give the conclusion. So see here now. Here we have discussed these 5 points. Lessee transfer the ownership. Option to purchase is below the market price. 75% of the majority life is same as the lease term. Then what we say, present value of the future lease payment is substantially equal to the fair value. Asset is of a specialized nature. These are the points which you have to consider. Any doubts to anyone in the finance and operating lease question? The topic. Then coming to accounting for operating lease. Okay. For operating lease, how do we do the accounting? We have seen that only one question was there in your past papers. We have done that in the class also. Operating lease. So how do we recognize this? We recognize the income here. It's an income. If I'm a lessor, it's an income for me. I recognize the income on SLM basis. I recognize the income on SLM basis. And the asset I recognize and I treat it as per IAS 40 or IAS 16. So debit, bank, credit, lease income. So which category? Operating or investing category, depending whether it's the main business activity of the company or not. And debit, depreciation, credit, accumulated depreciation. So which category? Depending on the use of that asset. This is for operating lease. Then coming to the finance lease. In finance lease, what do we do? So finance lease means risk and rewards are transferred. If risk and rewards are transferred, we de-recognize the asset and we recognize lease receivable. So see now, lesser de-recognizes the underlying asset because risk and rewards of ownership have been transferred to the lessee. Lesser recognize a lease receivable, net investment in lease. So we have to learn the calculation of this net investment in lease. Interest income, that lease receivable which you discounted over this unwinding is that finance income will go to operating or investing category depending upon the business activity. So see here now, note. We recognize what? We remove the asset. We recognize lease receivable. Debit credit will be your gain or loss. Debit or credit will be your gain or loss. Gain or loss either will go to investing or operating category depending upon the business. If it's the main business, operating. If it's not main business, investing category. Sir, how do we calculate net investment in lease? Net investment in lease is what? Present value of the lease payment plus present value of the unguaranteed residual value. So present value of the lease payment means what? Same as the lessee. We have learned 5 things. Whatever the lessee will include, we also consider here. And what is the additional thing? Present value of unguaranteed residual value. Then we record it at the present value. Then opening balance, interest, actual payment, and closing balance. And this lease receivable impairment will be charged to this. Impairment will be charged to this as per IFRS 9. So this was your accounting for lesser operating and finance lease. Any doubts to anyone in this? Operating lease and finance lease, the accounting? No, sir. So with this part is done. Then coming to one more case, manufacturer and dealer, not frequently tested, but it is part of your syllabus. Not frequently tested, it has not been tested, but all these topics are mentioned on the ACCA study hub. Understand? Even though it's not written in your Kaplan, etc., but these topics are there in your ACCA study hub, and ACCA mentions that we give priority to our study hub, not for any publications. Understand that? So that is the reason if you see the previous attempts, there was no question regarding remeasurement, etc. But now you can see questions regarding remeasurement, other topics also which are not there in any publication. Why? Because now ACCA is preferring its own study hub. That this content is there, you have to be prepared for this one. Then coming to manufacturer and dealer. What did we understand in this? Let me take the example. I mentioned that Ram is there. Ram needs a BMW car. He goes to the store, a dealer, and then he says that I do not have the full amount today. Then he says what store will say what? You can finance it, sir. You can easily finance it. So now if he will take the asset, if he takes the car BMW today, it will cost him 80 lakhs. It will the 1 CR. They will sell at 1 CR. The dealer will sell this for 1 CR. 1 CM. So then we have seen that there will be a profit. So profit will be there. So here when there is a manufacturer and dealer, whenever it is a case of manufacturer and dealer, it will include two things. Whenever manufacturer and dealer is there, and in that case we will have what? We will have two types of income. That is one profit and one is lease receivable. A normal profit also will have, and we will have the lease receivable, because he's saying that I'm not able to pay the amount today. What will I do? Every year I will pay you a certain amount. Let's say he's saying that every year I will pay you this amount, 2,50,000. 2,50,000 every year he is paying us. So in that case, what I say, in that case, this 2,50,000 if he's paying, I have to discount this and calculate what is the present value of this. So whenever it is a case of manufacturer and dealer, it includes two things. One is what? One is the normal profit and the lease receivable. Lease receivable. So see now, understand. Sir, normal selling price is 1 CR. If I say that I need the finance together, it will become 1.25 CR. The total cost will become 1.25 CR. So that 25 lakhs is what? A finance part. So this will be recognized over the period. This will be recognized over the period. This is 25 lakhs payment. So 5 payments are done: 25, 25, 25, 25. So this we will discount it and do the normal accounting. We have done a question regarding this also. So with this, the manufacturer and dealer part is done. Manufacturer and dealer, what is important, that two parts are there. Today, if we do not have the amount, we finance it. So the amount which we pay will be more. So the amount which I pay more, instead of 1 CR, I'm paying 1.25 CR for 5 years. So that 25 lakhs payments which I'm doing, I will discount it. And when I discount it, I get the lease receivable, and the profit element also I have to record it. So with this, the manufacturer dealer is done. The last topic from your this one, your leases, is sublease part. An important topic, sublease. So let us understand the sublease with this flow chart. So with this flow chart, each and everything will be covered here. So see now, in sublease, what will happen? A head lessor will be there. A is a lessor, has given this to B, a lessee. Now this A is a lessor. So what is the accounting for lessor? Sir, operating lease or finance lease? If it is operating lease, risk and rewards are not transferred. So do not de-recognize the asset. We will not de-recognize the asset. We will recognize the income on rental basis. Sir, finance lease. Finance lease, risk and rewards are transferred. We de-recognize the asset. We recognize receivable, lease receivable. And gain or loss we will have. Now, sir, this B will become what? The B is a lessee. So for lessee, there are two types of accounting. Sir, one is right to use asset and lease liability and recognition. Exemptions available. Low value asset, lease of short term. Now, this lessee will do what? This lessee is giving this machine to someone else on lease. So in that case, A will become what? In this contract, if you see, A is a lessee. If you see in this contract, A is what? A is a lessor, sir. So A should do the accounting for lessee also. A should do the accounting for lessor also. So lesser. So first he will do. either right to use asset or recognition exemption. Out of this, any one accounting he'll follow. Sir, for the sublease, what is the accounting he have to follow? He becomes a lesser. Now for lesser, what should he do? Understand. If the lessee has claimed recognition exemption, then always it will be what? Operating lease only. It will always be a operating lease. If lesser has recorded a right to use a certain lease liability, then we have to decide whether the sublease is what? Whether the sublease is what? Operating or finance lease. If it is operating lease, risk and rewards are not transferred. Do not de-recognize the ROU. Record rental income on SLM basis. And sir, we will charge depreciation ROU and lease liability also in the head lease. In this right to use a lease liability, you will do the normal accounting, and in operating lease for the sublease, you will recognize rental payments. In the second case, right to use a certain lease liability. If it is a finance lease, so what will happen in this case? Finance lease, risk and rewards are transferred. We de-recognize the right to use asset. We de-recognize the right to use asset. When we de-recognize the right to use asset, we recognize what? Lease receivable. We will recognize lease receivable, and debit credit will be the difference as gain or loss. Gain or loss. Then, so what is an important note? Do not charge depreciation or ROU, because that ROU have de-recognized. If you have de-recognized, will you charge depreciation on that? No, Baba. Sir, should we charge interest on the lease liability? Yes. For the lease liability, you have to do the normal calculation. And then, sir, it is given to C. C becomes a lessee. Then again, the cycle keeps on repeating. This cycle keeps on repeating here. This is the flow chart for your sublease, and a very important topic. This has not been tested, so the chances are high that it can come in your exam for December or the March attempt. Now, a important point, sir, when we determine whether it's a finance or operating lease, if B has given this to C, how should we determine that it is a operating lease or finance lease? This should be based on the ROU. It should be based on the ROU. I say that I have taken this for 5 years. I have taken this for 5 years. This machine. And further, I am giving to C. I am giving this to C. Today I have taken from you a machine for 5 years lease, and I've given to one more person for 4 years lease. Now you only say me, this will be what? Finance lease or operating lease? Everyone. This will become what? Finance lease or operating lease? It will become a finance lease because risk and rewards are transferred here, because it's the major life year. Out of 90%, it is what? Out of 4 divided by 5. Major part, it's a finance lease here. So when you have to decide whether it's operating or finance lease, it should be the underlying asset. The assumption will be based on right to use asset, not the original asset here. So with this, your sublease part is also done. See, in the notes I've written in detail also here what is the accounting, etc. But this flow chart is again your revision of lessee's accounting and lessor's accounting. So with this, your lease part is done. Your lease part is done. So these are the past papers as mentioned, which you have done in a class also, which you have to do it. So now your IFRS 16 is completed. Anyone, any doubts, you can ask me. As mentioned, it is not possible for me to discuss as detail we discuss in the class. It's just a revision. What are the points where you should avoid mistake, etc. Now you can ask me any questions. So what is important? See, I have not discussed manufacturer and dealer in detail. It's important that you understand that difference we calculate. You record profit also. We recognize what? The lease receivables also. Other than this, we have discussed each and everything. If you want this PDF, I will share. At that time, you can refer the example also, which we have done in the class. Any doubts to anyone? Any question? Okay, chalo, let me do the question only for manufacturer and dealer. Because, chalo, I know it is little bit difficult because mm, But let me do a question so that it will be clear. Operating lease, finance lease. See now, everyone, see, what did I mention? If I normally purchase, yes, 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 yes. See now, as I mentioned today, if I want to purchase a car, what will I? I will go to the dealer. The dealer will say that if you pay today, it is 1 year. But I say the dealer that I will pay you in 5 years. I will pay you in what? 5 years. I will pay this 1 year in 5 years. At that time, if I say I will pay this 1 year in 5 years, will he still say me to that the cost is 1 year? No, he will say the price is increased. He will say that what your price of the car will become 1.25 cr because I'm paying 5 years the payments. So instead he says if you pay today the payment 1 year, if you pay after or if you pay over the 5 years you have to pay 1.25 cr. So in this case profit is also included and it is a finance lease. We can see no, the if you go to a showroom you say the car is of 80 lakh rupees, the company will say what, sir, you can use this car for 5 years, no issues for us. You can use the car for 5 years and every year you have to pay 25 lakhs 25 lakhs 25 lakhs 25 lakhs as the payment. So let us see the question now. T buys and sells trucks and lorries. In June 2006, it agrees to obtain an articulated truck from a supplier and leases it to the final customer rather than sell it outright. It is leasing to the final customer. The truck was purchased for a cash at a cost of 280,000. So what is the cost for the truck? $280,000. On 1st July 2006 and immediately leased to the customer under a 4 year. So they have leased to a customer for 4 years. The lease agreement requires the customer to pay how much? 100,000 annually in arrears, and the interest implicit rate is what? 10 percentage, which is the commercial rate. The unguaranteed residual value is what, sir? $20,000. Is $20,000. Then the present value of the lease payment is what? 317,000 at 1st July 2006, and the present value of the unguaranteed residual value is what? 13,600. The fair value of the truck at this date is what? 330,600. So now identify, explain how IFRS 16 applies to this arrangement, etc. Now we have to discuss how this applies here. So see now. IFRS 16, in case of manufacturer and dealer, the dealer will make two types of incomes, that is profit on the sale and lease income over the lease term. There are two things there. The sale of the asset should be recognized at the commencement date of the lease. Today only we are selling it, we will recognize. Then the lease receivable will be what? Interest net investment in lease, that is lease receivable. So the net investment in lease is what? Present value the lease payment plus present value of unguaranteed residual value. So how much is that? This value. Unguaranteed residual value is 13,600. So we have included this value. This is the value. So the underlying asset is derecognized and it is replaced by the lease receivable. So what I'm doing, I am recognizing the lease receivable. Yes, sir. Then what is the value here now? If you can see here, then this lease payment will become what? My lease payment will become the selling price. The lease payment will become the selling price. But what is the amount we are receiving? The amount which we are receiving is what? The amount which we are receiving is what? $280,000. $280,000. So the cost of sales will become what? 266,400. So now see what is the formula here. The formula is that here revenue is recorded at lower of two things. Revenue will always be recognized at lower of two things. That is present value of the lease payment or present value of the fair value of the asset or present value of the lease payment receivable. So you've mentioned that point. Yes, sir. So I've see, I've recorded bank. Now what is the value of the sales? It will recorded at lower of two things. Fair value of the asset or present value of the lease payment. The present value of the lease payment is lower when compared to the fair value. I've recorded it. My cost of sales will be what? Cost of sales will be carrying amount of the asset minus present value of the unguaranteed residual value. You have to remember this. Unguaranteed residual value, that is $280,000 minus this value 13,600. So this is my cost of sales here. This is my cost of sales. So what will be the profit, sir? Profit is how much? Your profit is what? The selling price minus the cost of sale. The profit is 33,060. The profit is 33,060. You have to recognize this as a profit in the operating category. And then for this lease receivable, you'll follow the normal accounting which we do for the lesser. Understood? Not tested, it has not been tested in any of the past papers, but you have to know the basic idea that ki sir, there are two elements we record it separately. Lease receivable at the present value. So profit element we have to calculate, that is sales price minus cost of sales. Sale price is lower of fair value of the asset or present value of the lease payment. Cost of sales will be what, carrying amount of the asset minus the your this part, unguaranteed residual value. So with this, your IFRS 16 part is done. Any doubts to anyone in IFRS 16 now? If no doubts, let us take a break, come back and do the revenue. Let us take 10 minutes break. It's 11:17. Everyone be back by 11:27. Chalo, chalo, everyone, come back. Back, everyone.
Yes, sir.
Yes. See, if you have already done these topics, it will be good for you to revise. पहली बार सुन रहे हो सर, पहली बार सुन रहे हो टॉपिक एक्सेट्रा, you'll feel little bit bored एक्सेट्रा XYZ. That is for sure. Chalo now, let us start with IFRS 15 revenue, a very important topic. Again, we'll be using our class notes, our board notes only, so that it becomes easy. Chalo now, is this topic important? IFRS 15, yes, sir, a very important topic. As mentioned in IFRS 15, you have the 5-step model. Then we have some special cases, and the question comes from this one. So see, step one is what we have to identify whether it's a contract or not. First, we have to identify it's a contract with the customer or not. Step two, identify performance obligation. How many obligations are there? When I have done a contract with you, how many performance obligations are there? Then transaction price. In transaction price, we have seen three things: fixed, variable, non-cash consideration, customer provided goods or service, significant financing component. Yes. So we have seen in your exam variable payment, variable consideration question, non-cash consideration question also we have seen in the past papers, significant financing component also we have seen all the step number 4 is to allocate the uh, transaction price to the performance obligation, and this has been tested twice in your exam. We have done in the past papers also. Step number 5 is what's a record revenue as and when the performance obligation is satisfied. So for exam, what is important? Your step 2 and step 5 is very important. Step 2, frequently tested question. Each and every attempt question will be there. Identify how many performance obligations are there. And step 5, when should you record the revenue? So when coming to special cases, principal and agent, sale with right to return, bill and hold arrangement, warranties, consignment arrangement, repurchase agreement, contract cost, non
Oy, Ansu,
refundable.
may
Then we have what? Then we have contract modification. This also has been tested in your March, June 25 paper. Then customer options for additional goods or service. Combined contract, can we combine it? Royalty accounting, yes or no, depends on future sale. This also we have done one question, and the same question is there in your this one also practice mocks. So till here this is done. Now these are the important topics which will be covering in IFRS 15. Now let us start with the basic example which I've taken in the class to understand the 5-step model. After that we will revise the key points. So as I mentioned that in the class, A limited is there. A limited is there. A limited business is what? Selling lift, installation, maintenance service. A customer known as Raju is there. A limited is selling all these services to Raju. Now, for A limited, it will be what, sir? It's a revenue. It's a revenue. Now, how will A limited record the revenue? Now they are paying what? They are paying in cash of 80,000. Raju is paying what? Cash of 80,000 in total. Now can I say this 80,000 payment is done for what? Three purpose. So can I say there are three performance obligation in the contract: lift, installation, and maintenance. There are three things: lift, installation, and maintenance. So when should we recognize the revenue for lift? So the revenue that should be recognized for the lift when the lift is transferred to Raju. So when should we recognize the revenue for installation? Once the installation is done. So when should we recognize the revenue for maintenance? Over the 3 years. Because as I'm providing the maintenance, Raju is taking the benefit. How will Raju treat this? Either as PP, if it is for business use, if it's for personal use, then normal accounting will be done as an expense. Yes, sir. So with this example, first what should we do? We have to identify whether it's a contract with Raju or not. Step 2 is identify how many performance obligations. There are three things which we have to deliver. Then transaction prices, what is the amount we will receive? 80,000. This 80,000 we have to allocate into these three things. Then when should we recognize revenue? As and when performance obligation is satisfied. Yes, sir. Chalo then. What does revenue means? Revenue is an income. Yes, sir. Income from what? Ordinary course of business. Yes, sir. Customer will be what? Customer also will be for the party for whom we are selling the goods or service in the ordinary course. If I'm selling my PP, will it be my revenue? Nahi, Papa. No. And IFRS 15 will not apply to financial instruments. It will not apply to lease contract. It will not apply to insurance contract and non-monetary exchange. Exchange of similar goods between entities in similar line of business. In similar line of business. Why? To save time and cost. So we have taken an example that A is that A has its store in Mumbai, B has the store in Bangalore. But A received a order from a customer who is in Bangalore, and B received an order from a customer who is in Mumbai. And it's the same T-shirt. The T-shirt is same. So they do what? So A will say to B that A will say that we will provide the or deliver this to customer who's in Mumbai, and B will supply the t-shirt to what? Customer in Bangalore. So that these two parties can what? These two parties can save time and save cost also. So these is what? This is what, sir. When they sell it, they record this as a revenue. But when they exchange this between both the entities, this will not be a revenue. This, as I mentioned in oil companies, is seen more. So this will not be your what's a revenue. This transfer between the companies and saying this will not be revenue. When they sell to the customer, that will be treated as a revenue. Now the 5 step model. Step 1 is what? We should identify the contract. Step 2, define the performance obligation, determine the transaction price, allocation of transaction price, and recognize the revenue as and when performance obligation is satisfied. Step number 1, sir, when we will say that a contract is that when 5 important points are being met, as that is also one past paper regarding this step 1 also. What is the first point? That parties of the contract have approved, the contract has been approved by both the parties. Then each party can identify its right. They have identified what is the right. Then payment terms are also identified. How will the payment be done? When it will be done? UPI, cash, RTGS, bank, etc. It should be identified. The contract should have commercial substance. Commercial substance means because of this transaction, my future cash flow will be affected. Yes, sir. And it is probable that the entity will collect the consideration. It is probable that the entity will what? The entity will collect the consideration. The entity will collect the amount from whom? Will collect the amount from the customer. If the it is difficult for the entity to collect the payment, if the entity knows today that I am selling a goods to one of my friends, I know that he will not pay me. If he will not pay me, I will not consider this as a contract. I will not consider this contract, and I will not recognize this as a revenue. Simple. So the first question we are done. Then some important notes which you have to keep in the mind. If any consideration is received from the customer in an agreement which is not a contract, sir, it's not a contract as per IFRS 15, but still I have received the money. If I have received the money, I will recognize this as what? A deposit liability, a liability, because I have not yet fulfilled the obligation. A very important point you have to keep in mind. Whenever it's not a contract, when performance obligation is not satisfied, we say it's a liability. Simple. Sir, can we convert this liability into revenue in future period? Yes, you can convert this deposit liability into revenue in future periods when contract is terminated and consideration received is non-refundable. That means, like if I book a flat with one of the companies and after 3 months or 6 months I say I do not need this, will they give me back the token amount? No. So in that case, what will the company do? The company will immediately recognize that as a revenue. So contract is terminated, amount is not refund. Or when the goods or services are provided, if I fulfill my obligation, I provide goods and services, I can recognize this as a revenue. So your step 1 is done. Now coming to the step 2, a very important step for your exam purpose. Each attempt question is there, so that technical marks will be there. So write down the 2 sentences and get 2 marks technical out of 6 or 5 marks. Step 2, identify the performance obligation. So in the example which I had taken, A Limited and Raju, how many performance obligations were there? 3. Can I say why we say 3? Can I say all the 3 are separate or not? I can take the benefit individually. Yes, sir. If I purchase lift from A Limited, I can purchase the installation. I can purchase this installation from someone else in the market. Yes. Maintenance also I can purchase from someone else from the market. It is separately available. Yes, sir. Now a question to everyone. Raju is there. Raju has done a recharge. Let's take the example of Reliance company. You have done recharge. You paid 2,500 per year. Now, will you say that Reliance company has 365 obligations? When we see it is every day Reliance company has an obligation, but this will be treated as what single performance obligation, because the way the service is transferred is same only. It is same. Now, in my case, if you enroll in my regular batch, it is for 3 months. Will you say, ki, sir, you have 90 performance obligation each day and performance obligation? No. Every day, the way I transfer the service is same. So, it will be a single performance obligation for me. See now, step number 2, identifying the performance obligation. Performance obligation means a promise in a contract with a customer to transfer goods to a customer. Either the goods or service should be distinct. If goods or service are distinct, we recognize revenue at point in time. Yes, revenue is recognized over the period only, but it is a single performance obligation, Ajay. A series of distinct goods or service that are substantially the same and that have the same pattern of transfer. It is substantially the same and the way we transfer it is same. The pattern is same. Like cable service, recharge, security services. It is treated as a single performance obligation and revenue is recognized over the period. Revenue is recognized over the period. So if a question comes in your exam, what should you mention? The first technical for an asset performance obligation, the goods or service should be distinct. Goods or service should be distinct. So what does distinct means? So what does distinct means? This is an important part, you see. Meaning of distinct. You have to write down this to get 1 marks. Customer can benefit from the goods or services on its own or with another readily available resources with the customer. That means for each part, can the customer take the benefit individually? Yes, sir. In the exam, what did I mention? In exam, what should you think about? Can be purchased separately from the market. If I can purchase separately from the market, in that case, what will I say? In that case, I will say that it is the customer can take the benefit individually. If it is, if we can purchase separately from the market from someone else, then I say the customer can take the benefit of the goods or service on its own. And one more, what is the one more point? And the next point is what? The promise to transfer the goods or services separately identifiable from other goods or service in the contract. The promises which I've done in the contract, like lift, installation, maintenance, is separately identifiable. When will you say it is separately identifiable? When integration is not there, when customization is not there, when interdependence is not there. If these any one is satisfied here, it is not identifiable. Integration should not be there. It should not be interlinked. Customization and modification should not be there. Goods or services should not be dependent on each other. If the goods or services are dependent, it will not be a separate performance obligation. It will be one single performance obligation. You have to write down these 2 points to get 1 marks in your exam if a question comes regarding performance obligation. Is the screen visible, everyone?
No, sir.
No, no? Okay. There is a lag in the screen. Give me 1 minute. Due to some network problem, that is the reason. Yes, I hope now you can see the screen, everyone. Yes, so these are the important points here. If I say I have purchased, I have done a contract with a company that I'm purchasing a software. The company is saying that we are providing you service also. I have purchased a software from a company, they are providing some service also, some installation service. So basically, I'll think, okay, sir, I purchased a software, it's a separate performance obligation. This installation will be a separate performance obligation. But I say this installation will customize the product. This installation will customize the product. In that case, what will I say? It will be a single performance obligation, not two different obligations. So to be identifiable, integration should not be there, customization should not be there, and the goods or service should not be highly interrelated or interdependent. And the question in your exam question will come from these 3 points only. It's not that the examiner will give out of the box. You have to see properly here. Sir, if a promise to transfer goods or services not distinct from other goods or service in a contract, then goods or services are combined into a single performance obligation. It will be a single performance obligation. So with this, your step number 2 is also done. Then coming to the step number 3. In step number 3, we have to calculate the transaction price. What does transaction price mean? So transaction price is the amount which we will collect from the customer. What is the total amount that I will collect from the customer? Excluding amounts collected for third party like GST. If you collect any GST or any other tax relating for government, that will not be part of your revenue. So see here now. Example, we have taken the example, yes or no? Yes, sir. So, so transaction price includes fixed payment, variable payment, significant financing component, non-cash consideration, customer provided goods, consideration payable to customer. We have to understand all these cases. So let us understand what is fixed payment. So the first thing is what? Fixed payment. Fixed payment means what, sir? If I've given a contract today to you to construct my house for 10 lakh rupees, that is what fixed payment. It is fixed amount mentioned in the contract. It is always included in the transaction price. So variable consideration like means what? Some bonus, some bonus is given to you if you complete the project beforehand. Like, let me take the example. See here now. Raju is there. Raju has given a contract to A Limited to construct his house, and he mentioned that the I will give you $10,000. So this $10,000 is what's a fixed consideration. Now the transaction price will include what? Fixed payment plus variable payment. Now Raju is saying that if you complete the house within 1 year, I will give you 2,000 extra, a bonus to you. I will give 2,000 to you extra. If you complete within 8 months, I will give you $3,000. I'll give you $3,000. So how much it will be? $3,000 if we complete within 8 months. So the probability is what? 20%. So Raju is saying that you complete within 1 year 2,000, 8 months 3,000. So A Limited is saying what? A Limited is saying that based on our previous records, 80% chances that we will complete by 1 year. It is very difficult to complete within 8 months because we have some other contracts also. So whenever there are two things, we use which method? We use most likely outcome. The same thing will repeat in your IS 37 also. So what will I say? Sir, here the transaction price will include what? 2,000 extra variable payment, because company A knows that 80 to 90% chances are that we will get that 2,000, because based on our, yes, I'll be sharing, based on our past experience, we are able to complete the project. Yes, sir, we'll include this. Sir, if there are more than 2 to 3 outcomes, in that case, what we will do? We will use the expected value method, because that expected value method will provide what? Better presentation, better information. So we will consider the probability of each and everything, and we will consider the average point here, the expected value method. We consider probability and calculate it. So here my transaction price will be what, sir? 10,000 plus 2,025. So the transaction price will be 12,025. Now this is the fixed and variable part. Whenever a question comes in your exam for variable, what is the first sentence you have to write down? What are the technical marks? Easy technical marks. The one in blue here. Variable consideration will be part of transaction price, but only to the extent it is highly probable that a significant reversal will not be there. Reversal should not be there in future. If reversal is there, sir, we think, sir, reversal will be there in future. We are uncertain. If we are uncertain, no need to include in that. No need to recognize revenue only. No need to include that amount in transaction price and recognize this as a revenue. So this is an important point which you have to consider. Yes, sir. So with this fixed payment, variable consideration is done. Now coming to significant financing component. So significant financing component, what is the principal substance over form? Significant financing component means what, sir? Today, I say A Limited is selling a machine to Raju for 12,000 to Raju. And Raju is saying is to the company that I will do the payment after 2 years. If Raju is doing the payment after 2 years, will the company sell this machine at 12,000 only? No. The company will say there is an opportunity cost for us. For the 2 years, we are not getting the payment. So they are saying that instead you should pay 14,000. So that 2,000 is what, sir? That 2,000 is like an interest income for a company. It is an interest income for a company. So what will a company do? A company will recognize revenue today or in future when the amount is received. A company will recognize revenue today when the amount is received. So debit receivable 12,000, credit revenue 12,000, sir. Sir, what should we do for this receivable? This receivable I will increase better. This receivable I will increase. See, this 14,000 I have to discount it. Huh? Here for understanding purpose I have taken this example. So debit receivable, credit, P&L, income. Sir, which category we will take this? Which category we will take this? We will take this to operating category. This income will go to P&L. It will go in operating category. So at the end, sir, at the end after 2 years, once the cash is received, we will remove the receivable and we will recognize cash. So revenue is recognized when the goods are transferred, control is transferred today. And so what is the price at which the selling price? What is the market price today? This 14,000 I will discount and get 12,000. This is the case when goods are delivered today, payment is done in future. The other case is what? The other case is that Raju is doing the payment today only. Raju is giving what? 10,000 today, but the machine will be delivered after 2 years. Raju is doing the payment today, but a company is saying this machine we will give you after 2 years. So that means if payment is done today, that payment will be type of a loan. The company has taken a loan today. So what will the company will the company record revenue today? No, the company will recognize revenue in future once the machine has been delivered. So debit cash, credit liability 10,000, 10,000. So first year we have a liability expense. Yes or no? We have a liability expense here. So in this case, what will I say? In this case, I say liability expense, debit P&L, credit liability. Debit P&L, credit liability. I'm increasing my liability. And then on the other hand, what I'm saying? On the other hand, once the machine is delivered to Raju at the end of the second year, I will recognize revenue of 12,000. I will recognize the revenue of 12,000. So these are the two cases. The first case was what? When the goods are delivered today but payment is received in future. The other case is what? Amount is received today, the payment is done in future. In that case, we say significant financing component is there. We have to adjust it. Yes, sir. Now see here, everyone. Important point which you have to remember for your exam. Transaction price should be adjusted for financing component when either party provides benefit of finance. It is when benefit of finance is provided. Significant financing exists if there is more than 12 months gap between the transfer date of goods and service and consideration paid by the customer. Note, revenue should be recognized when control of the goods or service are transferred. Once the goods or service are transferred, you recognize revenue. So revenue should be recognized at cash selling price. So which date? Date when goods or services are transferred. Today it is transferred. I recognize today revenue based on the market price. I discount it. Sir, in future, in that case, future, no issues. Sir, discount rate. What is the discount rate we have to use? Discount rate we have to use is incremental borrowing rate. The second option is what? Implicit interest rate. But if you have seen in lease, it was ulta. It was implicit rate and then incremental. Here it is incremental first and then implicit rate. So till here you have no basic. Now, what is important for your exam? These are the points which you have to keep in mind. It has been tested once in a very old past paper 2010 at that time. After that, they have not tested this question from these points. See now, when we will say significant financing component will not exist, customer paid for the goods or service in advance, and the timing of the transfer of the goods or service is at the discretion of the customer. What is done? You are a customer, you are giving me $10,000 today only, but you are only saying, sir, provide this machine after 2 years, I do not need today. It is at your request. If you're giving this 10,000 today to me, and you're saying, sir, do not transfer the machine today to me, after 2 years only you transfer, no issues for me. In that case, it is at the discretion of the customer. If it is at the discretion of the customer, will this be a significant financing liability? Nahi baba, nahi. Then, if it is a sales based royalty, in that case also significant financing component will not apply. Let's take, I've given my notes to you, SBR notes to you or FR notes to you. This you have compiled as a book and you are selling it as a book. And when I say that you should provide a royalty on that, on each book you should provide me 20 percentage as a royalty. Now today I have transferred the books to you, but can I say the sale you are doing in future or not? You will be selling the books in future. Now when you sell the books in future, you should pay me royalty. Can I say time difference is more than 12 months, 1 year, 2 year, 3 year? In this also significant financing component will not come. Yes sir. Then the next one, difference between promised consideration and cash selling price arises from a reason other than provision of finance. Like payment terms might provide the entity or the customer with protection right. Like let's take an example that I am constructing your house. I have done the work of 50 lakh rupees, but you have only given me 40 lakh rupees. I have completed the work of 50 lakh rupees. I have recorded 50 lakh rupees of revenue, but you have only paid 40 lakhs. Why? You're saying that, sir, will not pay the 10 lakh rupees. We have a fear that if we pay full 50 lakhs, you will not complete our house, you will leave it incomplete. Then if we bring in some other new contractor, it is very difficult for us to identify a new contractor to complete our house. So for your protection purpose, that I do not do any mess up for your construction of your house, in that case you say what, we keep that amount with us, a protection amount. In that case also I'll say what, significant financing component will not apply. In auction also this also happens. If I have an item today, you have given me 10 lakh rupees today only, saying, sir, keep this 10 lakh rupees, do not give this asset to anyone, I will only purchase from you. In that case also I'm saying for the protection purpose you are giving that money, and either you collect the asset after 2 years or 3 years, it will not involve significant financing component. So with this, your significant financing component is done. If the payment date and delivery date is less than 12 months, will not apply significant financing component, because the present value concept will apply for what? More than 12 months. So fixed payment and variable payment, non-cash consideration. Sir, non-cash consideration, is this important? Yes, this comes in link with your IFRS 2 also many times. Share-based payment. See now, A Limited is there and Raju is there. A Limited is selling a Rolex watch to Raju. A Limited is selling a Rolex watch to Raju. So for A Limited, its business is what? Selling watches. So that Rolex watch will be what? Inventory. So they are saying it's a revenue for her. Now when they are selling this, Rolex watch has been transferred to Raju. Now Raju is saying that I do not have cash. मेरे पास cash नहीं है. Raju is saying that I do not have cash. Okay, the company is saying you do not have cash, then give me something else. Raju is saying मेरे पास Gucci का bag है. Raju is saying that I have a Gucci bag that I will give you, or I will give the shares of my company. I will give the shares of my company are limited. So in that case, what will be the transaction price here? What will be the transaction price? The transaction price will be what? Fair value of the non-cash consideration received. The first preference will be whatever non-cash consideration I get. Today I'm selling my iPad today to you. You're saying, sir, we do not have iPad, we have Mac. So you are giving Mac. For me, what is revenue? The transaction price will be the fair value of the Mac. Sir, if the fair value of that Gucci bag is not available or price is not available, then the preference is given to what? Standalone selling price of the goods or service given. Whatever is the standalone selling price, I will consider that as the transaction price. So with this, one more small part, non-cash consideration is also done here. Excuse me. So we are done one question in the class regarding this one. One, two questions we are done. Then coming to the next part, customer provided goods or service. Sometimes what will happen? No, the customer will provide. See, whenever the value is more, it's not that we will do the sale based on that. I will see what is the value of the Mac first in the market. Yes or no? It's not that blindly I will do the transaction with you. If I'm selling a Rolex watch today, I will see what is the value of Gucci bag. If the value is equal, then only I will sell that Rolex watch today to you. If not, I'll not sell only. If not, there will be cash payment here. That cash payment will be the we study this in IAS 16. That payment is their exchange of goods or service. Same principles will apply that, but that detail will not come in your exam. It's enough that you remember basic. Customer provided goods or service. Sometimes what will happen? No, the customer himself will provide the goods or service. Like I say, you are an entity. If you are an entity, you are constructing my house, Baba. Your entity, it's your construction business. You are constructing my house. When you're constructing my house, I say I have cement business. I will provide the cement to you. I will provide the cement to you. So see here now. A Limited is that it is into construction. It constructs the factory, etc. Raju is saying, please construct the factory for me. Okay. Raju has cement business. Now Raju will say what? Raju will say the cement which I've given, you should use this cement only to construct my house or my factory. When I give the cement, I say, I have given you, let's take 1 ton of cement. I say, use this 1 ton of cement only to construct my factory. Whatever is remaining, give me back. So if I'm saying you this sentence, am I transferring the control today to you of cement? No, Baba. If Raju is saying use this cement only to construct my factory, control is not transferred. If cement is given but not mentioned by Raju, nothing is mentioned by Raju that do not transfer, etc., then control is transferred. So see here now. If customer provides some goods or service, if entity obtains the control, then fair value of the goods or service supplied by the customer will be added to the transaction price. So in this case, what will I say? In this case, it will be part of the transaction price. But in this case, not part of the transaction price. See here now. If entity will obtain the control, entity gets the control, we include in the transaction price the fair value of the goods or service which we get, that the cement. If entity does not obtain any control, fair value of the goods or service supplied by the customer will not be added to transaction price. You will ignore. Not tested. It's not tested, but for understanding purpose, I mentioned this point. Yes, as it's part of your syllabus. Then coming to the next point, consideration payable to a customer. This is tested in your exam. I have seen in pre-mocks, not the latest, 1 year before the pre-mocks, I've seen this topic. Consideration payable to a customer. Why will the company pay back to a customer? Why will the company pay back? Today you're constructing my house. I've given 10 lakh rupees to you. You are giving in return 2 lakhs to me. Why will you give me 2 lakh rupees? Either can I say you are providing me a discount? Yes, sir. Or can I say that 2 lakhs you are giving to me because you have purchased something from me? I am your customer, you are my customer. I am your customer, you are my customer. So in that case, what should we do? See now. Consideration payable to a customer includes cash amount, coupons, discount, vouchers, etc. So if the amount which you pay, the amount which you pay back relates to distinct goods or service received from the customer. I am selling something to you, you are paying cash for me. So will this affect the transaction price? No, better. Does not affect transaction price. Your transaction price will not be affected. Recognize purchase of goods or services from the customer separately. Sir, it does not relate for any goods or service, sir. You're not purchasing anything from me, simply you're giving that amount to me, so it's like a discount. So what will I say? Account for the consideration as a reduction of the transaction price. So we will reduce it. So whenever there is no such goods or delivered which is given by the customer, then the payment will be reduced from the transaction price. If it is for the goods or services distinct, then we will not, the transaction price will not be affected. We will record a separate purchase only. We will recognize a separate purchase. So we had done one question. If you remember, it was regarding like a DMart example I had mentioned in the class. Then coming to your step number 4. Sir, is this important? This has been tested twice. See, what do we think now when coming to ACC SBR exam? I have seen a pattern that we ignore small points. In your pre-mock, when you see in our regular classes also, we have done transfer case, IAS 42, IAS 16, IAS 16 to IAS 14. We have done question also. And in your exam kit, 2 questions for that. Now in your pre-mock, you have a question of what? IAS 42, IAS 2. From investment property, you're traveling to inventory, the accounting. IAS 2 was tested in your pre-mock for 4 to 5 marks. You have to write down what is inventory, the definition, etc. So if you think is a small areas are very easy, will neglect, will not come. But what will happen? No, that will come a 4, 3 marks, 5 marks in your exam. Every attempt I see that 10 to 15 marks will be from small areas only. And it will be for FR part, not SBR part. Step number 4, allocation of transaction price to performance obligation. Sir, we have to allocate the transaction price. Sir, we have step 1 done, step 2, step 3, step 4. Can I say all these 4 steps are done on inception today when the contract is signed? Step 5, as and when performance obligation is completed. So see here now, we had lift of 90,000, installation this, maintenance. What is the total amount? 5,000. I say that the standalone selling price in the market, the standalone selling price is what? 9,000, 5,000, 5,000. So the total value is how much here? $100,000. But I'm selling this for what? 80,000. Sir, we provided 20,000 discount. Can I say this 20,000 discount is allocated to all the 3 components? Yes, sir. So see here now. For lift, installation and maintenance, how will I allocate it? So 80,000 into 90 divided by 1 lakh, 80,000 into $5,000 divided by $100,000, and again I will allocate. This is the way we have to allocate. This simple calculation will not come in your exam. What will come? Understand. Allocate the transaction price to each performance obligation or distinct goods or service on a relative standalone selling price. On what basis? On standalone selling price, SSP. SSP is what, sir? As per market. As per your general selling price, what is your selling price in the market? That's a standalone selling price, the price at which an entity would sell a promised goods or service separately to a customer. You have to mention this 1 marks technical if a question comes regarding step number 4. Sir, if SSP is not available, this comes in your exam, it has been tested twice. Sir, if standalone selling price is not available, what should we do? If standalone selling price is not available, use competitors price. Your competitors will be there, use that price and do some adjustment. Yes, sir. Then cost plus margin. If competitors price is also not available, cost plus margin, whatever is the cost plus margin or markup, your profit margin. So that is also not available, then residual approach. Residual approach not tested, but this has been tested. I think it is a name of the question, I do not remember. It's September December 23 or this one. You can check it everyone. So this, any doubts in step number 4 to anyone? Allocation, a very easy and a simple point. You have to write down this. This also carries 1 marks. If SSP is not available, what should we do? Let me share, say the name of the question so that you get to know. Okay, this is step 2. You, this question is regarding step 2. Either ये question होगा. This one. 34th question. Step number 4. Question. You can do this question so that you'll have a better understanding. Step number 4. Chalo then, let me come back to the notes. IFRS 15. Yes, sir. Chalo then, with this, we have done step number 4. The last step now from revenue, then done with this. Then we have special cases which we have to revise. Very important special cases. Meaning of testing we have done. Consideration, payable, allocation done. Now chalo, recognize revenue as and when performance obligation is satisfied. We should recognize revenue when, sir, we should recognize revenue as and when performance obligation is satisfied. Yes, 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 I will share it. So now see, recognize revenue as and when performance obligation gets satisfied. See now, sir, when we will say that a performance obligation is satisfied, we will say performance obligation is satisfied when the control is transferred. Control means what? We can take the economic benefit, each and every benefit we can take, we can direct the use of the asset. That is as per the conceptual framework, as per IAS 16, IFRS 16. But in revenue, what should we see? Control same, substantial all benefit are transferred and ability to prevent others from taking the benefit. But what are the indicators in the exam you have to focus on? In addition, an entity shall consider indicators of transfer of control, which includes the following. Entity has the right. If I'm selling today an asset to you, I will have what? Right to collect the payment or not? I will have the right to collect the payment. The customer has the legal title of the asset. Now, the legal title belongs to you. If I purchase an iPhone from the store, they will write a bill and give. They say from today, this iPhone belongs to Rahul. Simple. Then we say legal title has been transferred. Entity has transferred physical possession of the asset. I have transferred the physical possession to you. See, these are indicator. It's not for sure rule. Understand that. Customer has significant risk and rewards of the ownership. Customer has accepted the asset. Customer is saying that okay, I have taken this asset. Yes, sir. Then, sir, this is the control. Now, everyone, when we have taken the example of A Limited and Raju, did we recognize the revenue? How? Can I say revenue was recognized one shot, and for machine over the period? Now we have to see. We got to know, okay, sir, control is transferred. Now we have to see whether we should recognize revenue one shot or over the period. The second type of question that is frequently repeated in the exam is this one. Now, chalo, let us start with this one. Transfer of control now. Transfer of control. The control can transfer over the period or at point in time. The control can transfer over a period of time or at a point in time. When will I say the control is over the period, sir? Can I say for me as a tutor, as I'm performing, you're taking the benefit or not? So, what is the first thing? To be over a period, to recognize over a period, any one condition should be satisfied. Any one condition. Customer simultaneously receives and consumes the benefit as customer simultaneously receives and consumes the benefit as the entity perform. As I'm performing, you are taking the benefit. So for me, revenue will be over the period. Yes, sir. Then second one, or entity performance creates or enhances an asset that customer controls as the asset is created or enhanced. Can I say when I'm constructing your house, as I'm creating it, as I'm performing as an entity, it is creating an asset for you. As I complete your house, as I construct your house, it is completing. I'm completing your house, it is creating an asset for you. So it is enhancing an asset for you. So in that case, also I say revenue is recognized over the period. Very rare that question will come from these two. The question will come from the third point only, most of the time. Asset being created does not have alternative use to the seller, and on cancellation, entity has right to payment for the performance completed to date. Let's take I'm into I manufacture satellites. What we say satellites. In that case, I say what? Okay, leave that. I manufacture a machine. I manufacture a machine to you as you are into pharmaceutical business. You say, sir, please manufacture this machine. This machine is a specialized one, which is not there in which many company does not have. It's only one of type. When I manufacture this machine, can I say it takes me 2 years? If it is taking 2 years for me to manufacture that machine, can I say after 1 year, if you're saying, sir, I do not need this machine, it will be a loss for me or not? So, whenever I create an asset which is of a specialized nature, and on the cancellation, I am not able to sell this machine to anyone. On that case, what will I do as an entity? I'll in the contract, I will write what that whatever I have completed the work, you should give me the amount. Whatever work I have done till that date, I will receive the amount for sure. In that case, revenue will be recognized over the period, not when the machine is delivered. If the entity has the right to collect the payment of the work which they have done till that date, even though the seller, the buyer is saying we do not need this machine, etc., they have cancelled the contract, still we can recognize revenue over the period. This is also done. So if any one of the criteria is being met, we recognize the revenue over the period. If not, at a point in time, we will recognize the revenue. If none of the criteria, then recognize revenue at a point in time, one shot. So with this part is also done. This part is also done. Then coming to the next part, input and output method, not tested in SBR. It's part of the FR, but let me revise this. Input and output method. Sir, how should we recognize the revenue over the period? 3 years means, sir, how will I get to know? Whatever is the work I've done or whatever is the cost I've incurred, on that basis, I will record the revenue. I'll not waste much time in this, huh? So step one is what? We calculate the, there are two methods, input output. Input means whatever cost I've incurred. Output means what? Output is basically based on the value of the work. So the first step is we calculate the overall profit or loss. If it is a profit, no problem. If it is a loss, we recognize a provision. So step two, we have to determine the percentage of the work completed. What is the work percentage? Percentage of work we completed. Work certified divided by contract price into 100. Input method, cost incurred till date divided by total estimated cost. Step 3 is what? We calculate the revenue. How will I calculate the revenue? So contract price into the percentage in the step number 2 minus the revenue which I have recognized for previous year, because revenue is recognized for the year. Then sir, output, same, work certified minus revenue recognized in previous year. So what will be the cost of sales? Whatever cost you have incurred in the current year, record that. Step number 4 is what, sir? Step number 4 is contract asset or contract liability. Even though calculation will not come in your exam for SBR, but theory questions can come. The theory question could say what? You have recognized a revenue of $10,000, but the amount which you have received or invoiced is only $8,000. So the 2,000 is your contract asset because you have to receive that amount. Sir, if I have recorded revenue of 10,000, but I've received 12,000 in hand, so that 2,000 is a liability, contract liability, because I have to perform the work. So this was the revenue recognition or the calculation in input and output method. Yes, sir. So we have done one question regarding this. Now with this, your step 1, step 2, step 3, step 4, step 5 done. Now coming to the special cases which are very important. For 5 to 6 marks it comes. Yes, sir. So special cases, principal and agent. If you see the questions, your past exam, principal and agent has been tested more than 5 to 6 times. So, sir, principal and agent. Sir, principal will record revenue on what basis? Gross basis. Principal will recognize revenue on gross basis. Agent will recognize the revenue on what, sir? Net basis. Only the commission part. So, if today I am selling 1 lakh rupees worth of goods and 20,000 is what for me? 1 lakh 20,000 is the commission. I will record 1 lakh as the value of the gross revenue, but 20,000 I will record as a separate cost. So principal will recognize revenue over gross basis, agent on net basis, 1 marks, 1 technical marks. Then in the question, please identify these principles. Indicators. When will you say that the party is a principal? When will you say an entity is a principal? The entity is responsible for fulfilling the contract. Entity has the risk of the inventory. Entity can set the price. If these indicators are there, mostly you have to see what risk of the inventory and fulfillment. If risk of the inventory is with the principal, with that company, it becomes a principal. Simple. So principal and agent, we are done. There is no doubts in this. A very simple and a easy point. Sale with right to return we'll do later, but let us see the other examples which are short and simple. The next one is warranties. So warranties, what are the two types of warranty? Assurance warranty is also known as what? Standard warranty. Standard warranty and service warranty. Sir, assurance warranty means what? Are simple. It is a requirement by law. Its accounting is an IS 31. Like if I go to iPhone store, I purchase what? I purchase an iPhone. On that iPhone, I get 1 year warranty. That 1 year warranty, how will Apple company account it as per IS 37? Sir, if Apple company saying that you can pay 2,000 extra and get 2 more years warranty, so that service warranty, that is a warranty which I can purchase it. So it will be treated as per IFRS 15 as a separate performance obligation. as a separate performance obligation. So see here now, 1 year warranty IS 30. This 10,000 you can pay and you can take 2 years extra warranty. So in that case, what I say, my value will become how much? 2,10,000 transaction price. So this 10,000 is for 2 years. I will recognize this over 2 years as a revenue as per IFRS 15. So warranty. So the first principal and agent we have done for warranty. Second one. Then coming to consignment arrangement. In what will happen in consignment arrangement, a very easy and a simple thing. You can see this in your practical world also. We have taken the example of now see, this is Maruti Suzuki. Maruti Suzuki is a company which provides cars to a dealer. Now this dealer is that. So this dealer, they have provided the cars to the dealer, 10 cars. Maruti Suzuki saying that you have 6 months time to sell this car. You have 6 months or 2 months time. Now this dealer will sell to the customer. Now once Maruti Suzuki delivers the cars to dealer, is the control transfer? You will say yes. Yes. But if I say Maruti Suzuki is saying what? Maruti Suzuki is saying that whenever they want, in that 6 months or 2 months period, whenever they want, they can say this dealer that please provide this car to some other dealer. They say that it's dealer X that please provide this car to dealer Y because he is in need. So here ultimately you see physical possession is with the dealer. But overall, who is controlling? Maruti Suzuki. Maruti Suzuki is controlling. In that case, what we say? In that case, we say the control is not transferred. So, will Maruti Suzuki recognize today revenue? No. Maruti Suzuki will recognize revenue once that car is sold to the customer. Once that car has been sold to the customer or the time has been lapsed, 6 months or 2 months time, whatever they give. So, consignment arrangement, see now, goods or services revenues recognized once the control get transferred. Indicated, the entity controls the product until a specified event occurs, such as sale of the product to a customer. Until it is sold to customer, whatever I say you have to follow until a specified period expires. The entity can require the return of the product or transfer the product to another party. If Maruti Suzuki wants, they can collect the car from us back whenever they want. So that means I do not have the control. The dealer does not have an unconditional obligation to pay the entity for the product. That means dealer does not have what? Dealer does not have the obligation to make the payment because they're saying once we sell to the customer we will make the payment. So what will happen in consignment arrangement? Even though the physical possession is with you, can I record revenue? No, baba. So in your exam question they would have done a mistake. They would have mentioned that the physical possession is transferred, but as an entity I can collect it back whenever I want, etc. The dealer is not paying, revenue should not be recognized. This is consignment arrangement. Yes, sir. This is also done. We had done one question in the class. Then coming to bill and hold arrangement. One more a simple, easy case, bill and hold arrangement. So bill and hold arrangement means what? See, I say Raju is that. Raju entered into contract with A Limited for the lift. Raju is saying that okay, I am out of station. I am out of station. Please deliver the lift after 30 days. Now you only say A Limited is saying that the lift is ready. I can transfer you today only. But Raju is saying I am out of the station. I can't take the delivery. After 30 days, you make the delivery. Can A Limited record the revenue today? Yes. A Limited can record revenue today when conditions are satisfied. What are the conditions? Let us see. When the customer has requested, all the conditions should be satisfied. Customer has requested, product must be identified. That means product should be separately identified that this belongs to Raju. Product currently must be ready for physical transfer. Raju is saying I will come after 30 days, but Raju is coming within 10 days. We should provide him. An entity cannot use or sell this to anyone. Entity will not sell or use this. Simple. So this also done, bill and hold arrangement. All small cases where question comes. This all you have covered in your FR also. The next part, coming to the next part, is non-refundable fees, a very important topic. It has not been yet tested, but it is part of your syllabus. ACCA study have also has mentioned this point. Non-refundable fees, that means what? Today I go to a gym, I pay 10,000 rupees. I go to a gym and they say, ki, sir, per year the fees is 10,000. Per year the fees is 10,000. Now, how will the gym record that revenue? You only say. Can I say gym will record that revenue over the period for 12 months? Yes, sir. But today the gym is saying what? The gym is saying what? Pay us 1,000 as a initial amount for registration. Now, when I'm registering for 1,000, am I getting anything in return for that? No, sir. So sometimes what will happen if I register, I pay 1,000, they provide me a T-shirt, a bag, etc. So see now, non-refundable fees. If that non-refundable fees is given, it will not be refunded to me. If any goods or services are provided, if any goods or services are provided, entity will recognize revenue today only. If gym is providing me a T-shirt, a bag, gym will recognize revenue today because they are transferring me what? A T-shirt. If it does not relate for any goods or services provided, it's not a separate performance obligation. It is accounted as an advance for the future goods or service and revenues recognized over the period. Along with that, 1 year, this 1,000 also will be recognized as a revenue. If goods or service are given on the first day, recognize revenue. If nothing is given, then gym will recognize that 1,000 also as a revenue for 12 months. Non-refundable fees, a small case again. So this is also done. Then coming to the next small topic, contract cost. Not so important once it has been tested in your exam. Once only. So contract cost, sir. So to fulfill the contract, there are two types of cost: contract acquisition, contract fulfillment. To acquire the contract, first of all, I have to acquire a contract. Then only I'll be able to complete it. When I acquire a contract, I incur a lot of expenses. Like an expense, like my sale persons, the sale team is traveling all over India to get the customers. In that case, I will directly take this to P&L. Incremental cost to obtain the contract. As I get the contract, I have to pay commission to my sale person. To the sales team, I have to pay a sale commission because they have got a contract. So can I say this will be recognized as an asset? If they have got a contract today and on that I'm paying a commission, this will be recognized as an asset, as an inventory. Sir, how we will recognize this as an expense then? Over the years, as and when you complete the performance, you recognize expense in the P&L. Contract fulfillment cost. Sir, to fulfill that contract, we are incurring cost. Can I say like depreciation, amortization, etc.? All these are covered as per respective standards. There is no such linkage here. Yes, sir. Sir, if a cost is incurred and it is not covered in any standard, if I incur a cost and that is not incurred in any standard, can how will I record this? An entity will recognize as an asset. Asset means what? Inventory better. It's like an inventory only, contract asset, and over the period we recognize that as an expense in cost of sales. An entity will recognize asset for such cost if all conditions are being met. That means cost should directly relate to what? The contract, like material, labor, overheads, etc. cost. Not overheads, material, labor cost. Cost generated or enhanced resource of entity that will be used to satisfy performance obligation in future. That means the cost which we incur should be satisfied. It should satisfy a performance obligation in future. Entity expects to recover the amount. Entity will say that we will recover this amount in full. We will recover this amount in full. In that case, we will recognize this as what? As a contract cost, and over the years we will take into P&L. Very rare, not tested. What are the points which are tested frequently? Principal and agent. We'll do a concept known as sale with right to return, repurchase agreement. All these are the points which are frequently tested, warranties, etc. Now, chalo, let us do sale with right to return. So, see here now, sale with right to return. Let us directly take an example so that with the example it will be clear instead of reading the theory. I say that Raju is that. Raju is purchasing from Amazon. Raju is purchasing from Amazon 10 t-shirts. Raju is purchasing from Amazon 10 t-shirts. Now, Amazon knows that Raju will not keep this 10 t-shirts with him. Amazon also knows that based on his past records, 8 t-shirts he will keep with him. So, in that case, can I say Amazon company will recognize revenue for 8 t-shirts only? Remember, step number 3, variable transaction price should include the amount to the extent that future reversal should not be that. Here chances are that reversal is there, sir. So the selling price is 200, cost is 100. So Raju can return in 20 days. So on the first day, when the company is recording revenue, they will record revenue for 8 t-shirts only. They receive the full cash. They record revenue only for the 8 t-shirts. And the remaining they will record as a liability because they think they have to pay back the amount. But sir, inventory is going out full. So what will the Amazon company do? They would have credited the inventory. They have increased the cost of sales by 1000. Now you only say it is wrong or not. They have recorded a liability. They have recorded revenue for 8 products. But why did they record a cost for 10? It's wrong. This is the normal accounting which the company will do. So whenever there is a sale with right to return, we will recognize the revenue to the extent that future reversal should not be there. Yes, sir. So right to receive the goods back on the same day, on the first day, what will the company do? Amazon company on the first day, they will record as right to receive asset credit cost of sales. Right to receive asset credit cost of sales of 200 because of the two inventory, because they have that right to receive it back. So they record right to receive an asset and cost of sales they reduce it, because the revenues for 8, cost of sales also should be 8. That is the important thing. So see here now, sale with excuse me, sale with right to return. Recognize revenue for the transferred product only to the extent entity expects to be entitled. Therefore, revenue would not be recognized for the product expected to be returned. Recognize a refund liability for consideration received on goods expected to be returned. So we recognize a refund liability for the goods which are expected to be returned. On the same day, the company will do what? Recognize an asset corresponding adjustment to cost of sales in P&L for the right to recover products for the customer from the customer. Entity shall present the asset separately from the fund liability. You should not net it off and record it. You have to record it separately. So this was sale with right to return. So with this warranty done, sale, consignment, bill and hold arrangement, non-refundable contract cost is done. Contract modification I will do. But before that, repurchase agreement we have to do. Yeah. Let us do this repurchase agreement, a frequently tested topic in your exam. Repurchase agreement. Here you have to understand the basic what happens in this. So repurchase agreement, what happens in repurchase agreement? A limited is that A limited is selling to Raju a lift, but on the same day A limited signs a contract with Raju saying that we will purchase this lift from you back. So if they are purchasing this lift back from us, if they purchase from Raju back, in that case we say it's a repurchase agreement. So in repurchase agreement, it should not be treated as what? It should not be treated as a sales. It should be treated as a financial liability. So see now, there are cases which we have to understand here. Huh? Yes, sir. Okay, see here everyone. I hope everyone knows the difference between forward, futures, and options. Huh? Forward and future, obligation or right. In forward agreement, can I say always what will be there? Obligation. For sure, obligation you have to purchase. In future, we have a right. In option also, we have a right. Sir. Call and put option. Obligation or right. See now here. See, in case of repurchase agreement, revenue should not be recognized as the customer does not obtain control, even though the physical possession is there. Now let us understand the cases that comes in your exam. Forward agreement. Sir, in forward agreement and call option, the accounting is same. If the repurchase price is more, if the repurchase price is more, what will happen? Sir, if the repurchase price, I'm selling at 10,000, I purchase back at 12,000. It's a loan, a financial liability. So recognize a financial liability for the consideration received at beginning, whatever amount you have received. Recognize the difference as what? As the finance cost over the period. So debit interest credit financial liability. Sir, at the time of repurchase, what we will do? We will remove the liability as we are receiving the cash. No, we will remove the liability as we are paying the cash. So this is where the repurchase price is more. Sir, if at the time of repurchase, the repurchase option is not exercised. If the repurchase option is not exercised, I have done a contract with you saying that I will purchase after 1 year from you at 12,000, but I did not purchase only. In that case you can recognize this as a revenue. Simple, we can recognize this as a revenue. Sir, if repurchase price is less than the original selling price, if the selling price is less, it is less, then it is treated as per IFRS 16. It is treated as per IFRS 16 leases. See, debit bank the selling price whatever amount we receive, credit deposit liability, and credit unearned income. I say that the selling price is 10,000, but I purchase at 8,000. That 2,000 will be what? An unearned income. Why will I purchase the asset from you back at lower amount? Because I'm giving you to use this. So if I'm giving you to use this, it is an income for me. I will record unearned income. So over the period, I'll record unearned income in P&L operating category. Then, sir, once at the time of repurchase, we will remove the liability because we are paying the cash. Sir, if cash is not paid, if you're not repurchasing, I will record this as a revenue immediately. Instead of transferring the deposit liability, financial liability, I will transfer this to sales account. Simple. So this was in what case? It was in case of forward and call option. Can I say in forward and call option, who will have in forward agreement as an entity? I have the obligation, I have to purchase from you. Call option, I will have the option whether I want to purchase or not. Now put option. Put option means as a customer you have the option. You are a customer, you have the option. Now you only say if you have an option, if you have an option to sell me the goods back, when will you sell me the goods back? If you have an option today, when will you sell the goods back to me?
When I'm getting more than the market price.
Yes. See now, when will you sell me back? Today I say that you have done a contract with me. I am selling this for 10,000. I say I will purchase from 12,000 from you. I'll purchase at 12,000. You will say financial liability, but I say you have the option. Customer has the option. But now in the market, customer knows that in market the price is 14,000. If in the market the price is 14,000, will you sell me? Will you sell it? These are the types of questions that comes in your exam. In your past papers, there are questions same. So you will not sell me, you will go to the market. Sir, we will sell to the market. Customer will sell in the market. But what will I do as an entity? What will the entity do? Sir, I have a doubt. I am the entity. I have a doubt because the customer will not come and sell me because in the market the price is more. He will sell in the market. Why will he sell me? So in that case, as the entity, what should I do? I should account this as what? Sale with right to return. Sale with right to return. Yes, sir. This case. But I said 10,000, 12,000. In market, the price is 8,000. I know entity knows that in market, the price is 8,000 only. In that case, how will the entity do the accounting? Everyone say me. In the market, the price is 8,000. I have given the customer has the right to sell me option. In that case, as an entity, I have to purchase it. So when I purchase it, it becomes what? The value is more. It's a financial liability. It's a financial liability. So we see from whose point of view? We see from the customer point of view whether the customer can benefit or not, whether the customer has substantial benefit or not. If the customer has the benefit, for sure he'll sell me. If the customer does not have benefits, why will he sell me? He will sell in the market. So if there is no obligation to repurchase, I know today because customer is getting more, then sale with right to return normal accounting. A question is also there in your exam kit regarding this one, past papers. It is likely that customer will exercise the put option. If customer is likely to exercise the put option, what will I treat this as? Same as your forward and future contract. Whether repurchase price is less or more, we will do the accounting. So with this, your repurchase is done. A very important part for your exam, which you have to know, repurchase agreement. We have done two questions in the class. I'll provide the notes. You can refer others. But regular batch students, we have done in the exam kit also 2 to 3 questions we have done regarding repurchase. So doubt nahi hona chahiye. Yes, sir. Then coming to the next one. Last 2 or 3 topics, we will do that and take a break, come back and do IS 36 and IFRS 5 for 20 to 25 minutes. See now. Customer option for additional goods or services. customer is provided with the option for additional goods or service, you will see this concept as new. There are two new concepts which is mentioned on the ACCA study. Out of that, one only I've taken. But if you require the other one also to be explained after the class, we can discuss that point also. No issue in that. So see here now, everyone. Raju is there. Raju visits to Lenskart. Everyone knows Lenskart specs Miltan. Raju purchased the glasses for 10,000. $10,000. 10,000. See now, Lenskart has given what? Raju is paying 1,000 rupees or $1,000. Lenskart is giving what? Lenskart will give a discount. Okay, Raju purchased the glasses today, as well as Lenskart is giving an option to Raju that a discount of 40 percentage will be given. A discount of 40 percentage will be given if you purchase anything within 1 year. If you purchase anything within 1 year, you will get 40% discount. But the amount should be what? Up to 1,000. You have to purchase bare minimum of 1,000. If you visit to Zara, H&M, they provide this or not? You purchase today, they say, sir, within 6 months, if you provide, you get 40% discount extra. Practical application questions. In that case, how will Lenskart do the accounting? Can I say this 1,000 rupees includes two performance obligation? One is the glasses today we purchased, and one is the discount which is provided in future. One is the glasses which we purchase, and the one is the discount which is provided. So this 1,000 is allocated to two performance obligation. This 1,000 is regarding two performance obligation. I have to split it. I have to split it. Sir, when we split it, how do we split it? Standalone selling price. Standalone selling. I say the standalone selling price is what? I say the standalone selling price of the glasses is 1,000 only. Sir, but what is the standalone selling price of this discount? Calculate it. Calculate it. See now, for the next year, if you purchase, what is the discount you'll be getting? You have to purchase up to 10,000, you'll be getting discount. So 1,000 into 40%, 400 is the discount. Now, as I mentioned that this 1,000 includes two performance obligation. So the SSP for the glasses is this one. So what is the standalone selling price for the discount? You have to calculate. That is only important. Now, when we calculate the SSP, we have to be, this is based on the judgment. I say that we have mentioned that you have to purchase for 1,000 rupees. Within 1,000, you will get a discount. Above this, no. So now we assume that we think, okay, the customer will come based on the past records, the customer will come and purchase 500 worth of goods. We assume that the customer will come and purchase 500 worth of goods. This data will be provided in the question if the question comes. 500 into 80, what is the probability? The probability is that 80% that the customer will come. What is the discount they are getting? Sir, 40% is the discount. But can I say what is the normal discount? Even though after 1 year or 6 months you come, you will normally get 10% discount. But can I say what is the additional discount? Additional discount is 30 percentage. Additional discount is 30 percentage. So in that case, what is my SSP? My SSP will become 120. We have to calculate the SSP based on what is the value of the goods the customer will purchase, what is the probability, what is the discount they get when removing the normal discount. Yes, sir. So in that case, this 1,000 into 1,000 divided by 1,120 because the SSP is this. So I get 892 and 228. Sir, how we will recognize the revenue? How will Lenskart company recognize revenue? Lenskart company will recognize revenue of 892 today. They have received a cash of 1,000. They record a revenue of 892 and they record a liability of 228. So when they will recognize this 228 as a revenue? Once the customer will redeem it. I say 1 year is done. After 6 months only the customer is coming and redeeming this. So company will reverse this and record revenue. Sir, 1 year is done. Customer did not come only. In that case, the discount has been expired. So company will include this in revenue immediately. Either once the customer comes and redeem it or once it is expired. So the same thing I have written here. Same thing I've written and explained you. Yes, sir. So with this, your customer option for additional goods or services is also done. Then coming to the next, combined contract. Sir, when can we combine contracts? When can we combine contracts? Today I say that you have enrolled in my FR classes. After 3 days, you are saying, sir, you're teaching very good FR. We want to enroll for SBR also. Can I say after 2 days only you're saying ki, sir, we want to enroll for SBR after 1 year whenever you're writing your exam? Can I say when you enroll into my classes for SBR, will you ask a discount or not? Yes or no? So you'll say, sir, I'm your existing student. I'm paid for FR, sir. Existing students are provide for SBR some discount, sir. So that contract which is there will be what one only. Listen, two or more contract may need not be accounted for a single contract if they are entered at or near same times. Two or more contract may need to be account as a single contract if they are entered at or near same time. See, this at or near same time is not defined with this. Is this 1 year, 2 year, 3 year? It's not defined. We are talking about one contract. We are not talking about performance obligation. Performance obligation can be 1, 2, 3, 4, but contract can be one. See now, with same customer, it should be with same customer. And if any one of the following condition exists, if any one condition exists, it's done. Yes, sir. The contract are negotiated as a single package. You have negotiated this as a single package. You have enrolled for FR. You're saying, sir, we will enroll for FM and double A also. You're negotiating as a single package. So it's a single contract. Even though today you enroll for FR, after 5 days, 10 days, you come and say, sir, we will enroll for FM. But you're negotiating case here, you provide FM also, tax also, PM together. So it's a one contract for us. But there are performance obligation. There are 5 performance obligation. 5 papers, 5 performance obligation, but contract is one. Or the amount of consideration paid in one contract depends on price or performance of other contracts. You say ki, sir, we have enrolled in FR, so we are your existing students, provide us a discount. Yes, this is also one contract. Now at or near time does not is not defined. Understand that. Not tested, not frequently tested, once or twice this has been tested. In that also you have to write down this, and technical marks was available. 3 marks or 4 mark question. Out of the two, technical marks was for this 3 points. The goods or service promised in the contract are a single performance obligation. A single performance obligation, your step number 2. Let me give a very good example for this one. Everyone say me today, I purchased the software from a company and they are providing me installation service also. How many performance obligation? Everyone same here. How many performance obligation? Two. Yes, sir. There are two performance obligation. I say that today I purchased the software from a company. After 5 days, I am purchasing the installation. And this installation service will do what? This installation service will customize my software. Will customize my software. Now everyone same here. How many obligation? One or two? Ajay is saying one, others one, one, one. Now everyone, can you see something here? Sir, today I entered into one contract and after 5 days I entered into one more contract. There are two contracts. But can I say it's a one performance obligation or not? Many companies will do this to manipulate. Many companies will do this to manipulate the books. They will they will purchase a software today. They will say to a customer, let's say you are my customer, I am selling you a software at 31st December, my year end. On 2nd January, I am selling an installation to you. Can I say today I record less revenue? I record 10,000 revenue today and next year I record 10,000. Is this proper? Nahi Baba. You do manipulation. It is customized one. Now, whenever there is a customized one, it is a single performance obligation. Now, single performance obligation, can I say revenue will be recognized over the period? So, to avoid manipulation, this is done. This detail will not come in your SBR. But you have to remember that if it is a single performance obligation, wherever it's a single performance obligation, and that two or three things you have entered into different contract, it will be one only. It will be one. So, with this, the combined contract is also done. With this part is done. So all the small areas we have covered. The last part which is pending is what? Contract modification. A very important topic. As mentioned, March June 2025 it has been tested. So it's a request, please everyone solve it once. Now I'm explaining, even though you have not learned this, I'm explaining you now. Please do it. Your remeasurement and this one, I keep on saying, student, these topics are very important. But many will neglect saying कि sir नहीं आएगा. Yes, I know. If you're lucky, I say that good day, very good day, a good day, very good day, bad day, very bad day. Very bad day means the topics which you have not learned or these small topics you ignore. Ki sir, it will not come in my set. It comes for 8 marks and then nothing you can do. So see now, contract modification. Modification that will be a separate contract. Understand the principle and the logic behind this. So it will be clear. Contract modification. Today I say that you are a seller, I am your customer. I ordered today, I have entered into a contract with you, provide me 10,000 iPhones. I have done a contract, I have fixed the price. Yes, sir. I have done. After after that, I'm saying what? After 15 days, I'm saying provide 5,000 extra iPhone to me. I've done one more contract with you. I'm saying that 5,000 extra iPhone and the price is something else. See now? Today I've done a contract with you, provide me 10,000 iPhones for each for $1,000. Huh? After few days, I'm doing one more contract saying that provide me 5,000 iPhones for 1,200 each because the market price has increased, sir. Demand is very high, etc. Sir, what should we do? The contract has been modified. Modification is done. Now see here, everyone. Modification that is constitutes a separate contract. When will you say, sir, the modification is a separate contract? There is no such problem. It is not interlinked. Understand? It is treated as a separate contract if both the conditions are satisfied. Both the conditions should be satisfied. Increase the scope by adding new goods or service that are distinct. Can I say it is increasing the scope of the contract or not? Yes, sir. By adding extra goods. These goods and services are distinct. It are distinct, separate. Yes, sir. Then increase in the contract price reflects standalone selling price of the goods or service. Yes, sir. It is standalone selling price of the market. In that case, can I say it's a separate contract? Will you do any modification? No need to do any modification. No need to do any modification, bete. So whenever there is increase in the scope and the goods and services which I provide are distinct, are not interrelated, interdependent. In that case, what will I say? It is a separate contract and increase in the contract price is also separate. We will say it is a separate contract. For separate contract, no need to modify the contract. In your March, June, there are two contracts. Out of the two contracts, one contract is regarding this one only. One contract is regarding this one. They have mentioned the additional goods and services which are provided are distinct and the selling price is as per the market. It is not interlinked or interdependent. So we say it's a separate performance obligation, separate contract, separate you will recognize. So 1 marks. Yes, sir. Now coming to the next one. See, I've done this example here also. If you know in the class, A Limited Raju. A Limited is into painting business. Raju is saying that paint my office 3 floors. So he's saying that what? He's saying that what? 50 hours are required. So 50 hours per thousand per hour. How much is the 50,000 is the total amount will A Limited receive for painting the floors. Now painting means over the years A Limited will record the revenue because as and when they are performing painting, it is creating an asset or it is benefit for Raju. Now I say 25 days are done better. 25 days are done. So if 25 days are done, what is the revenue A Limited recorded? If 25 days are done, 25 into 1000. So they have recorded revenue of 25,000. 25,000 A Limited recorded revenue. Now see case 1. Now A Limited is saying that your work is very good. A Limit Raju is saying to A Limited, you're working very good. I like your work, etc. Raju is saying, I have a warehouse. I have a warehouse. For that warehouse also you have to paint. That will take 15 days. Okay. And the rate is what? 100 as per the market. It is taking 20 hours and this 100. Can I say it's a separate contract or not? Yes, sir. Because this warehouse is totally different. It's distinct. And here the price is also distinct. It's not combined, etc. Case 2. I say Raju is saying, okay. You have to paint my house. Raju is saying that you paint this warehouse 20 hours. But Raju is saying what? I have given you so much work, no? So please reduce the rate to 80 per hour. 80 per hour. 800 per hour. Everyone say me, if the rate becomes 800 per hour, is this equal to the SSP? Is this equal to SSP? This is not equal to SSP. So the conditions are not satisfied here. Sir, the scope is that goods or services are destined, okay, but the SSP, this one is not satisfied. So what will come? See here now. If you have to write down this, if goods or services are distinct from the goods or service originally contracted, so the goods or services are what, sir? Distinct, but not the standalone selling price, not the standalone selling price, not the standalone selling price. Or if remaining goods or service are distinct from the goods or service transferred or before the modification date, the goods or service are distinct but the standalone price is creating a problem. In that case, how will you do the accounting? Account for modification prospectively. Prospectively means from today only consider the changes. From today only consider the changes. So termination of the old contract and creation of a new contract. You will terminate the old contract, you will create a new contract. Yes, sir. Transaction price for new contract will be what? Remainder of the transaction price in the existing contract that has not been recognized as revenue and consideration promised in the contract modified. How is this? Understanding. With the same example of this one. See now, everyone. Can I say terminate the contract and record a new contract? Yes, sir. Now, I say that A Limited has completed how many? 40 hours of work is done from the old contract. How many hours of work is remaining in the old contract? 10, sir. So for the 10, sir, how much is the value? 1000 per hour. Sir, 20 hours. 20 into 800. That is 16,000. So how much is the total amount? Total amount will be 26,000. Can I say this 26,000 is for how many hours? This 26,000 is for 30 hours now. So how much will be per hour now? 867. So this 867 will be done for what, sir? Now from today, whenever I record revenue for per hour, I will record based on 867. I will record based on 867. I will record based on 867. When, sir, when the goods or services are distinct between the new goods or service or the remaining goods or service, which are there? The remaining goods or service or the new goods or service are distinct. It should not be interrelated, interdependent here. Yes, sir. The next one. If remaining goods or service are not distinct from goods or service transferred on or before the modification date, therefore form part of a single performance obligation that is partially satisfied at modification date, the accounting should apply. What is the accounting you apply? Retrospective. You apply retrospective. So important is what? Distinct, not distinct. If it is distinct, prospective treatment. If it is not distinct, retrospective impact. So retrospective means how? Listen here. With the same example of the paint. See now, everyone. A Limited is there. Same thing. 2 hours per day, 10 hours, 20 hours. Okay, then office, 50 hours. They are saying, see here, everyone, listen now. Office required 50 hours. Now, A Limited is saying to Raju that it is difficult to complete within 50 hours. It will require 60 hours. Now, can I say, is there any goods or service here? No. There is no such goods or service. Can I say it is relating to that office only? It is relating to that office only. It is relating to that office only. Now see here. For this 10 hours, whether payment will be done by Raju depends. Depends. Depends, sir. No payment done for additional hours. If no payment is done for additional hours, the revenue still will be about 20,000. 20 hours into 1,000. This one. So see here, everyone. What is the total amount? So 50 hours into 1,000, 50,000. But now we recognize revenue this much. But can I say this amount which we are getting now 50,000 is for 60 hours or not? Yes, sir. This 50,000 we are getting for 60 hours of work now, not for 50. We have recognized this as the revenue. But what is the correct treatment? See now, sir, 60 hours that is 833 per hour. So when it is 833, what is the revenue you had to record? Sir, 833 into 20, that is 16,660. But what is the revenue you have recorded? 20,000. So remove that. reverse the revenue, retrospective impact. Retrospective impact should be done because we have recognized revenue, but here it's not a distinct, it's a single performance obligation only. So what I have done, I have mentioned that this 50,000 is for 60 hours now, so the revenue which I had to record is 16,660. I have recorded more revenue, so I'm reversing it there. So retrospective impact. So there are three cases. So read the question carefully and understand whether the goods or service are distinct or not. If the goods or service are distinct, or any new goods or service are distinct but SSP is not there, then prospective treatment. If the goods or services are not distinct, it's a single performance obligation, follow retrospective impact. So with this, your IFRS 15 revenue is done. Your IFRS 15 revenue is done. Any doubts to anyone? I've explained in detail each and every point. Yes, if you're able to remember some points, it's good. Revise it. Key points which I've mentioned. So now the time is 1. Everyone be back by 1:10. After that, will not take much time. 20 to 25 minutes, I will discuss impairment and IFRS 5. So be back by 1:10, everyone. Chalo, chalo, everyone come back. Chalo, 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 chalo. See, as mentioned, some of the other points you'll be finding, ki, sir, we have not done this, we have not done this, etc. No issues. No issues. This time, what should you focus on? Just these coming 8 days or 7 days. Just be calm and try to recall the points and what will happen and how should we write our answers, etc. Write down mocks, get it evaluated. It's important. Chalo, everyone, back. Yes or no in the chat box? Not take much time in IAS 36 and IFRS 5. Very important topic, as you know. When you see your past papers, IAS 36 and IFRS 5 has been tested too many times. Last September attempt also there was a question in one of these set regarding CGU, etc. Yes or no in the chat box? If yes, I can start then.
Yes, sir.
Yes, chalo then. IAS 36 impairment. Now, what does impairment means? Impairment means what? Reduction in the value of the asset. Why do we? Reduction, that means downfall in the value of the asset. Why will the value of the asset fall down? Because of a lot of reasons. It's simple. Impairment, is it choice or mandatory? It is mandatory. It's not choice like your revaluation, etc. Simple. Why impairment? To show the true value of the asset. To show the true value of the asset. Simple. Why impairment is done, sir? To show the true value of the asset. Now, if I say a machine is that today, the carrying amount is 9,000. I can sell this or either I can use it. If I sell it, I'll get 6,000. If I use it, I get 3,800. That is how, sir, I will use in the business. Every year I'll get this cash flow. I'll discount it. Yes, sir. Now, what is this here now? Which one will you do? Will you sell it or will you use it? We will sell it, sir. So I will sell it. So how much is the loss here? Impairment loss. That is of 3,000. So whenever impairment is done, in impairment we compare carrying amount and RA. What is RA? Higher of fair value less cost to sell or value in use. See, RA is higher of fair value less cost to sell and value in use. Compare carrying amount and RA. When will impairment be? Impairment will be done at year end, every year end. That is carrying amount and RA is 8,000. Impairment loss of 2,000. If carrying amount is 10,000, RA is 12,000. Will there be any impairment? No impairment. There will be no impairment. Simple. So can we do impairment directly? No. First, impairment indicators are there. Impairment indicators or hint is that. Then we do impairment test. In impairment test, we compare carrying amount and RA. So impairment carrying amount is more than RA. RA is higher of this asset impairment like intangible asset, tangible, etc. Will impairment of inventory come here? No. It is covered in IES 2. Will impairment of financial asset come here? No. Will impairment of leases come here? No. Everything is in financial instruments. See, impairment is not done directly at each reporting date. The entity assesses whether there are indicators that the asset is impaired or not. Whenever you get a question, write down this. The entity should assess whether there are impairment indicators at the year end. So, if impairment indicators are there, we will compare the carrying amount and RA. If the carrying amount is more, RA is less, impairment is there. So, we recognize impairment loss into PL. Technical marks. Hint or indicator, yes, sir. We do impairment test. We say in impairment test carrying amount is more RA, impairment. If not, no, nothing we will do. Yes. So now the question that comes in your exam is regarding indicators. Very important. You have to write down this. Sometimes there are technical marks for writing this indicators also. There are two types of indicator, internal as well as external indicators. So internal indicators are what? Damage of the asset. When the asset is damaged. Performance of the asset declined. The performance of the asset has declined. Significant adverse changes in the extent or the manner in which the asset was used. So first the asset was used in a very good thing. Now we have relocated. We have this production. This machine is used in the production. Now we have shifted to some other department, and the way the production was done is not the same way as we used to do the in the old method in the old department. So in that case also we say the asset has been impaired. Indicators that external indicators, what are the external indicators? Change in the market value. The market value suddenly comes down due to a lot of factors. Change in technology. When change in technology is there, it should affect negatively. Yes, sir. Government restrictions, government policies, etc. Demand is decreasing. Whenever your demand for the product is decreasing, what will happen? So the value in use will come down. If value in use will come down, RA also will come down. Hint, sir. Increase in market interest rate. So market interest rate is increasing. If your market interest rate will increase, what will happen? If your market interest rate is increasing, if rate is increasing, my value in use will come down. Market capitalization is lower than net asset of the company. A lot of time this indicator is given in the exam. So market capitalization is lower, but my net assets are more. As per the market, my value is less of the company, but I have recorded at a higher value. This is also an indicator for impairment. Yes. So increase in discount, we have seen this. Yes. So calculation, so many basic calculation questions we have done. Then coming to the important point, all these points we have already discussed. Yes. Impairment indicators done. Then now, impairment test is compulsory for what? Even though hints or indicators are not available, impairment should be done for these three items: goodwill, intangible asset with indefinite life, intangible asset under development phase. Yes, sir. Then how do we calculate fair value less cost to sell? Sometimes a question comes regarding this also. Fair value less cost to sell and value in use calculation. So fair value means what? As per IFRS 13, fair value you will take it. Less cost to sell. Cost to dispose. Cost to dispose is what? Incremental cost directly attributable to this disposal. Do we consider finance cost, income tax? Everything is ignored here. If a professional fees is paid for the valuer to value to calculate the fair value, that is also not included. It is excluded. So termination benefit, it's excluded. We cover in what? IAS 19. We have seen that. Then value news, a very important part for theory. The first type of question that comes is regarding indicators. The second type of question that comes in your IAS 36 is regarding value news. What are the cash flows we have to consider, exclude, etc. So see now, future cash flows. When we consider future cash flows, what all we include? Projected cash flows. Projected cash flow, whatever cash flow I'll get from that use of the asset plus disposal proceed when I sell the residual value. So cash flows that are required to generate the cash flows, like the cash flows which I incur are necessary for that asset, like day-to-day operation cost are incurred to maintain the asset in its current conditions are included. What are excluded? So future cash flows. Future cash flow from a future restructuring. The company is saying future we will do this, this will happen, and then our future cash flow will increase. All is ignored, which is not yet committed. If it is committed, we can include it. So finance cost and taxation is included. Both the things are excluded. So which discount rate? This also has been tested two times. Which discount rate we will use? Discount rate we will use pre-tax cost of capital. Pre-tax cost of capital. This should consider what? Time value of the money and risk specific to the asset. Risk specific to the asset. Then cash flow projection. See now everyone. This is also a question that comes regarding when we consider the cash flows. What are the projections we have to keep in mind? Can I say the cash flow should be reasonable and supportable? Assumption should be that the cash flows which we are projecting should be reasonable and supportable. It should be based on recent financial budgets. It should be based on recent financial budgets. Then, sir, maximum of 5 years. We can take the cash flows for 5 years. Sir, can we take more than 5 years? Yes, we can take more than 5 years if it is justified. Simple. Growth rate should be steady growth rate. It should be steady or a decline growth rate. And the growth rate should not be more than the long term average rate. It should not be more than the long term average rate. In the class, we have done value news calculation also. See now, excuse me. Same thing repeating. Cash flows which we are including, excluding what? Cost to improve or upgrade the asset. Future plans which are not yet committed are excluded. Liabilities, finance cost, taxes are excluded. Sir, discount, which rate we should use? Pre-tax rate. Sir, if pre-tax rate is not available, then we will use weighted average cost of capital, which you have learned in your FM. Then the general rate in the market, we will take it. These are the points which you have to keep in mind. Then for impairment, I know. Where will you record the impairment loss? Sir, whenever impairment loss is that, we will recognize this into P&L straightforward. If there is any OCI balance relating to that, first utilize that OCI balance. So see, debit impairment loss in P&L, credit asset. If revaluation model, first see whether any revaluation surplus is there, and then utilize that, then take to P&L and then the asset value. You will reduce the asset. So P&L which category? Operating, investing category, depending upon the nature of the asset. So with this part is done. Now coming to CGU. What is CGU? A third type of question which is very important for SBR. Calculation is also important, but it's not that important. The theory part is very important here. Now CGU. Why CGU? Why do we use CGU? Why do we use the concept of CGU? It is tested for 3 to 4 marks in your exam. You have to mention that sometimes the array of individual asset. Now, when I want to calculate the array of this, will I be able to calculate the array of this pencil? No. Will I be able to calculate the array of this iPad? No, because the entire teaching setup is what? A CGU for me. So sometimes array of an individual asset is difficult. So that is the reason we calculate the impairment based on CGU, because they will not generate independent cash flow. What is CGU? CGU is the smallest identifiable group of assets which generates cash flows which are independent when compared to the other cash flows. Technical marks, all these points. Yes, sir. So how will you allocate the impairment in CGU? Calculation will not come. As I mentioned, calculations are very rare, but the theory regarding this will come. So how we will allocate the impairment? Sir, we allocate the impairment first to any specific asset, then we allocate to goodwill, and then we allocate to other assets on the pro rata basis. On pro rata basis. Simple. We have done a lot of questions in the class. Yes. So now this is also done. Impairment. Then coming to this one. Now, will you allocate impairment to inventory, trade receivable, cash, etc.? In a CGU, you will not allocate this better. You will not allocate to financial asset because these are already at the RA. It is already at the RA. That is the reason. Now coming to the reversal of impairment loss. Sir, can we reverse impairment loss? Yes, sir. Can goodwill impairment loss be reversed? No. Remember this point. December 2024. This was tested for 3 marks. Explain why the goodwill impairment cannot be reversed. You will say goodwill impairment cannot be reversed. If it is reversed, it is considered in what? It is considered as part of the other intangible asset. You have to write down this point. So reversal, how we will get to know? Whatever indicators we have learnt, it will be ulta, reverse. So reversal, that means there are some good indications about the asset. Yes. So whenever there is a reversal of impairment, the reversal of impairment is restricted. The reversal of impairment is restricted. So what is the restricted amount? The reversal of impairment is restricted to lower of two things. That is RA at the date of reversal, and carrying amount if there was no impairment in the earlier period. Carrying amount if there was no impairment. If there was no impairment. See here now. Any increase in RA of the goodwill following the recognition of an impairment loss will likely be an increase in internally generated goodwill, which cannot be recognized, or it will be belonging to some other asset which we have not recognized. So, impairment of reversal of goodwill is not done. Understand that. See now reversal, everyone. Let me show you a question how reversal is done. I say my value of the asset is 1000, 10,000, 2000, 2000 depreciation, 8000. I say my RA is 3000. My impairment loss in PNL was 5000. Sir, in the future years, the depreciation will be based on the new amount, that is 3000 divided by 8, 375, 375. So my carrying amount here is 2250. On this date, there is a reversal. Now, on this date, the RA is 5000. Can you reverse the entire amount? Can you reverse from 2250 to 5000? No, better. We have to calculate lower off. See now, we are standing at 2250. We have to go to 5000. Can we go? Let us see. We have to calculate two things. Lower of what? RA. What is RA on the date? So 5000. Carrying amount if no impairment was there. If impairment was not there, what is the carrying amount, everyone? 10,000 divided by 10,000 is the depreciation into 4 years. 4,000 is the depreciation. 6,000 is my carrying amount. So what is lower here? So 5000. That means I can travel from 2250 to 5000 full. I can travel. But if I say my carrying amount came to 4,000, can I travel from 2,250 to 5,000? Not possible. I can only travel till this point here, till 4,000 on. This is reversal. So reversal of impairment can be done. Calculation never tested in SBR, but the theory, what is the formula, that lower of two things, etc. Then goodwill. Can we calculate impairment of goodwill individually? No, sir. Why? Because goodwill will not generate independent cash flow. That is the reason goodwill impairment is calculated in CGU. Yes. As well as for corporate assets. Corporate assets also will never generate independent cash flow. The impairment is calculated in what? In CG only. Now, what is corporate asset? See here, let me give the example which we have taken in a regular class. Like corporate asset. I say Reliance company has an office in Mumbai. From this office, they are operating all the business. Petrol, oil, geo, Reliance retail, etc., green energy, etc. Can I say, is this building generating independent cash flow? No. This building is not generating independent cash flow. Only head office is that. The other these businesses are generating. So excuse me, this is known as corporate asset. This will never generate independent cash flow. So this value of this head office should be part of all these CGUs, will be part of all CGUs. So 2000 is value of the asset, building value. So it is used for five purpose. So 400 will be allocated here. So when we do the impairment in CGU, we have to take this, we have to consider these values. Sir, how do we allocate the impairment on these CGUs? Same way as other assets, same way like other assets. So corporate asset is also done. These are the questions which we have done in the class, if you remember. So with this, your impairment part is also done. Now coming to IFRS 5. Any doubts to anyone on this? Impairment, no doubts, no? 3 to 4 type of question that usually comes in your exam. Most of the time, impairment. The directors have not recorded impairment. You have to suggest whether it's right or wrong. Yes. Then IFRS 5. Non-current asset held for sale and discontinued operation. So a non-current asset is that I'm classifying this as held for sale and discontinued operation. So this standard covers two parts, part A and part B. So non-current asset means what, sir? IAS 1638, IAS 40. So first we'll consider part. IFRS 5 will not apply to deferred tax, financial asset and agriculture. It will not be part of this. Yes, sir. Now everyone see here, what is the first point definition? Technical marks. When can you classify an asset held for sale? A non-current asset or a disposal group can be classified as held for sale if we recover the money through what? A sales transaction. We sell this and get the money rather than use. Disposal group means what? A group of assets and liabilities which are disposed of in a single transaction. Where the liabilities and asset we dispose of in a single transaction, a single negotiation is done. Yes, sir. Now coming to the criteria, a very important point for SBR. This one, you should know this. Classification is held for sale. So to classify the asset as held for sale, we have to meet certain conditions and criteria. What are these? Two conditions. Asset must be available for immediate sale in present condition. Immediately the asset must be available for sale. Today I have an asset. I say I'm selling it, but I have an order to be completed for my customer. It will take 3 months. Will the asset be classified as held for sale today? No, it will be classified as held for sale after 3 months. Sir, I have classified the asset as held for sale, but 15 days is required for government approval, etc. And we know that we will get it. So can I say it is customary practices? It's okay. So today only I can classify this as asset held for sale. No problem in this. So the asset must be available for immediate sale and sale must be highly probable. When will you say sale is highly probable? When five things. Management is committed. Active program is there to locate a buyer. Asset must be marketed as a price which is reasonable to the fair value. Transaction is completed within 1 year from the classification date. Significant changes of withdrawal from the plan is unlikely. So if I classify the asset as held for sale on 1st July, my year end is 31st December. So the what is the time period? Till 30th June 2000 X1 I have time. I can classify this asset as held for sale. So when we classify the asset as held for sale, how do we record it? How do we record it? We record it at what? Once the asset is classified as held for sale, we record it at lower of two things. That is carrying amount after depreciation, amortization as per respective standard. Less lower of fair value less cost to sell. Lower of carrying amount of fair value less cost to sell. So here, if the carrying amount is more, fair value less cost to sell is less, we have an impairment loss. This impairment loss is as per what? This impairment loss is as per IFRS 5. So if fair value less cost to sell is less than carrying amount, the difference is recorded in P&L, charged to P&L simple. Which category? Depending upon the asset. Once we classify the asset as held for sale, do we charge depreciation? No, Baba. Once we have classified the asset as held for sale, no depreciation, nothing. Sir, this impairment loss will always be recognized in P&L? Yes. Here, revaluation model, cost model, you will not see anything. IAS 36, we have seen. Revaluation model, we use OCI, revaluation surplus. But here, there is no such thing. Directly full amount into P&L. Dump it. Even though revaluation surplus is there, you will not utilize it. So initially, we recognize that lower of cost of carrying amount of fair value less cost to sell. So for disposal group, sir, for disposal group, same like your CGU. The accounting is same like your CGU. Not tested, questions are not tested frequently. Subsequent measurement, sir. Subsequently also at what value will recognize, sir? Subsequently also will recognize lower of carrying amount or fair value less cost to sell. Sir, in subsequently, I say fair value less cost to sell becomes lower. So what is the carrying amount here? Carrying amount, just we have done above. Carrying amount was carrying amount as per respective standard and fair value less cost to sell whichever is lower. That carrying amount, whatever is the new value, will become the carrying amount for the end of the year. Then fair value less cost to sell. Again we have a loss, sir. My carrying amount is more when compared to fair value less cost to sell. Impairment loss into P&L. Sir, if the fair value less cost to sell is more when compared to carrying amount, is there any loss? No. But sir, can we do the reversal here? Yes. Reversal is possible. Maximum to what? The impairment loss which we have recognized in IAS 36 and IFRS 5. Not important, not tested, but you should know the theory. So, fair value less cost to sell is more. Can we reverse it? Yes. Maximum to what? Maximum of the loss which is recognized as per IAS 36 and IFRS 5. So we have done the definition, we have done the recognition criteria, initial measurement, subsequent measurement is done. Yes, sir. Then presentation, a very important thing, theory point. 1 marks, technical marks you'll have. So whenever a non-current asset held for sale is classified, a non-current asset is classified as held for sale, it is shown as a separate line item under current asset as a separate line item. So for disposal group, what we should do? For disposal group also we have to show separately the current assets and current liabilities. Can we offset it? No, 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 no. You can't offset it. Record the asset separately, record the liability separately. Simple. Presentation also done. See here now. If any asset is classified as held for sale after reporting date, you only say, today my year end is 31st 12 2000 X1. Frequently tested point IFRS 5 and IFRS IAS 10. I say that today the asset is that after 2 months, the asset is classified as held for sale. The asset is classified as held for sale. Here, the criteria, the condition was not being met. The two conditions or the criteria were not met. So, do we classify the asset as held for sale? No, Baba. We will not classify because it is after the reporting period. It will not be considered. It is a non-adjusting event and only disclosure should be provided. Sir, sometimes non-current asset shall be classified as held for sale even if non-current asset is not sold within 1 year. So today I decided to sell the asset. I classified as this held for sale. But 1 year is done. I did not sell this yet. I did not sell it yet. Can I still classify this asset as held for sale? Yes. Even though after 1 year we can still classify the asset as held for sale, conditions should be met. Frequent topic from your IFRS 5. That is what delay in the circumstance is due to circumstances which are outside the control of the entity. The delay is due to circumstances which is not controlled by the entity, and sufficient evidence is that the entity is still committed to sell it. That means the reason for not selling the asset, what is the reason? Actual reason. The reason was not in our control. The circumstances were not in our control. And evidence is that the company will sell it. In that case, we say what? Still, we can classify the asset as held for sale. Yes. Then coming to discontinued operation. So in discontinued operation, what will happen? See now, I say petrol, geo, Reliance, this retail, oil, green energy, all this is that. Now, Reliance is planning to discontinue. Reliance is planning to sell this in future. If Reliance is planning to sell this in future, how we will present the profit or loss? We will present in a separate line item. We will present in a separate line item as profit or loss from discontinued operation. Sir, in this, what all we include? Profit and loss from the oil company, as well as the gain or loss on the disposal. When I dispose of this oil sector, oil business, what is the gain or loss, as well as the profit or loss belonging to that company for that year. I will show it separately. Why, sir? Because comparison can be done easily. We do this for current year as well as for previous year. Even though I'm selling this oil part of the business today, but still I will disclose in the previous year. Why? For comparison purpose. So the detailed calculation is shown in notes to account. Notes to account. Now, this is important. You have a link with your consolidation also, and in your exam, will the calculation question comes? The question will ask you to identify whether it's a discontinued operation or not. And whenever a question comes, two technical marks will be for this. Two technical marks will be for this. A discontinued operation is a component of an entity. Component means which generates independent cash flow that has either been disposed of. Either you have disposed of, you have either disposed of or classified as held for sale. So if an item is classified as held for sale, it can be a discontinued operation. Yes, if the conditions are being met, and represents a separate major line of business or geographical area. Like I'm closing my business in US, Singapore, etc. It represents a separate geographical location. I was we were into ACCA, CMA, CPA, etc. etc. A lot of other courses. We have shut it down. Yes, that is also a separate major part. Just an example is part of a single coordinated plan to dispose. I am It is my single plan that I will sell the business. Either it is a geographical area or a major line in a single coordinated plan. A subsidiary which is acquired exclusively with a view to resale. If I acquire a subsidiary with a view to resale, it will be a discontinued operation. So these are the three important points which you have to know and you have to write down. Component of an entity means which generates independent cash flow. Simple. Yes, sir. See now, everyone. A disposal group is held for sale. Yes, sir. It will affect what? Balance sheet. Sir, can a disposal group be a discontinued operation? Yes. A disposal group can be a discontinued operation if the criteria are met. So it will affect your P&L also. Previous year, current year. If discontinued operation does not, if the disposal group does not meet the definition of discontinued operation, there is no such problem. So keep an eye on this. Whenever a question comes regarding disposal group, think from discontinued operation also. If a question is for 5 to 6 marks. Yes. So with this is done. Then presentation. What did I mention? Presentation. One single line item will show what? Profit or loss and gain or loss on the sale of that division. Presentation, a single line item like this. See, a single line item, you will mention it. So we have done questions. We have done a presentation question also, and this one. Entity should disclose the following items in the notes. What are the disclosure we should provide in notes to accounts? Revenue and expenses of discontinued operation, pre-tax profit or losses on discontinued operation, tax expenses, profit or loss after tax, cash flow, all this we have to mention. So here, if a discontinued operation is in the current year, if you have classified any disposal group or a discontinue operation in the previous year also, we have to do the comparative. Previous year also we have to do for comparison. But if an asset is classified as held for sale, should we do for the previous year also? It's not required. It's not required. Only in discontinue operation previous year also we have to restate the values and make the changes. This was one of the questions which we had done in the class. This was the second question which we had done. Okay, this was a question, a latest question only, September, December 2022. We had done in the class. The question was very good. So with this, your IFRS 5 is also done. So with this, your day one revision is completed. We've discussed leases and revenue took good time because these were the two important topics. And I've explained in detail. Then 36 and IFRS 5, 3 or 4 types of question that usually comes. Other than this, nothing will come in your exam. So with this, anyone, any doubts? No doubts. Then let me end the session. Then I can take your queries. Bye bye. Have a good day. Signing off. Radhe Radhe to everyone.